विमल, बोलो जुबान केसरी।
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, where I get you the hottest companies which are buzzing in trade, and to get more details about it in our special segment KYC. But before that, let me give you a hint. Try to guess this company, and if you are from Mumbai, maybe you might have guessed this by now. It's a Mumbai-based realty and an EPC company. Interestingly, the company has secured a large deal in South Mumbai, or as we call it, Sobo. The stock is up 52% from March lows. That's the third hint for you. Try guessing the company, and of course the company is having other listed players as well. And the company's name in focus is Man Infra. This is the company which we are going to talk about. But why are we calling this company? क्या नया न्यूज़ आया है कि हमने इस कंपनी को बुलाया है? First question is definitely going to be a major announcement, acquiring the project in South Mumbai with a sales potential of 2,000 crore rupees. Now remember, this is a third important acquisition happening in this space, and of course we will ask the management about the key areas of expansion in Mumbai, and is there any alpha when it comes to the redevelopment of projects. That's an interesting area to look at. Another important question to be asked would be the progress for the key projects and the timelines in the residential segment and the growth outlook ahead. Of course, we'll ask the EPC segment also, where the order book status and where does the alpha lies. The management has stated that they're going into the PMC business, and if the growth outlook improves, the margins also improve. Apart from this, also an important question to be asked for Man Infra is the new launch pipeline and the growth outlook for FY27. That is something we'll be asking for. And of course, the raw material prices, the construction cost, have they gone up because of rising oil price? That's a key area to ask. But to give entire perspective, we'll join in by Manan Shah, the managing director of MICL Group, where he'll give us the entire strategic viewpoint of the company and the industry as a whole. But let's try to understand MICL karti kya hai, Man Infra. Of course, there are two sides of businesses. One is the EPC business and another is the real estate business. They're already there more than 60 years in this industry as well. But the real estate portion, that is where the value is coming. It's of course helmed by Manan. The company has expanded in this segment and also is going global. There is Miami, Florida and other places in US where they are having their projects, multiple major ports. That's the EPC business. That's the old business, the legacy business as I call it. It's there in Navi Mumbai, Chennai, Gujarat and Kochi. So definitely there are two levers of growth coming for this company. Now they are also building one of the tallest residential towers. It's called Aradhya Awan. It's in Tardeo. It's in the South Mumbai district, and that is where the street is trying to understand how big this project can get. Of course, remember, company works in an asset-light model like a JD or a JV, that's joint development or joint venture, and that makes sense as well. MICL Group has recently acquired its third residential project in South Mumbai, and that's what we are going to talk about. These are the important recent announcements, and the sales potential would be roughly 2,000 crore rupees for the next 4 to 5 years. लेकिन साउथ बॉम्बे में तीसरा काम उन्होंने उठाया है. The projects, the names are Aradhya Awan project, that's at Tardeo. The second one is of course the culmination of 3 projects, and the total value comes in at roughly, you could say, 8,000 odd crore rupees is the Tardeo 2.0 project, and this is the expected value. This is the 5.75 million square feet. That's what the company has stated in the exchange filing. Now they recently received a 512 crore fundraise also via the preferential route, of course, for the working capital and the expansion plans as well. Let's talk about the 9-month FY26 numbers. आंकड़े क्या कहते हैं? 711 crores worth of collections. When you judge a real estate or an infra company, collections matter more than revenue recognition. Almost 4 lakh square feet sales led by projects in Tardeo, BKC, Ville Parle and Dahisar. These are the places in the Mumbai metropolitan region. Company is largely net debt free at consolidated level, and this is a very positive point for an infra real estate company. The portfolio, let's look at it. It's roughly 3.8 million square feet of ongoing residential projects, and if you look at the realty business also, that's around 4.9 million square feet of carpet area, to put that in perspective. So we spoke about the portfolio, we spoke about the 9-month numbers and about the company, but why is Man Infra in sweet spot? As per my analysis, higher collections and realizations are likely in FY27, especially from their expensive premium projects. Another important reason for Man Infra being in sweet spot is company is largely debt free. I spoke about the net debt angle. Also, let's talk about the third important reason is the strong volume buying has been seen amongst HNIs and DIs over the last 1 month. So yes, smart money is moving in this counter because there was a massive sell-off. Valuations are still very much attractive, and I'll explain you the important price to book ratios to track for this counter. And apart from this, there is an important segment, the premium segment, the ultra luxury portfolio as we call it, near the western suburbs. That is where the alpha lies for most of the developers, and we have heard that. So this is the reason why Man Infra is in a sweet spot. But let's understand the company a little bit more. But before that, there are some rules in KYC, and we follow them thoroughly for every company. These are the rating parameters we give to the company. This includes income statement, balance sheet, cash flow. These are the core numbers to look at. Also the return ratios, how that has panned out over a period of time. Let's get in the shareholding. Let's get in the street cred. It's one of the favorite segments where we understand पैसा कितना बना investors का, छोटे समय पे, medium समय पे और long term. Valuations, we'll compare that with the history of the company itself and the outlook ahead. This is very much important because future is something where the discounting happens for the share price. Let's talk about income statement to start with, and let's see what's happened here. And largely we say the 3-year CAGR numbers are in single digit, not much happening here on a long term basis. There is a little bit of lumpiness also comes in because you have these businesses, and collections and receivables is always a tough fight for any real estate or a EPC player. But the numbers also, the Q3 numbers were also not that great, you know. They had seen some kind of lumpiness. Maybe the fourth quarter generally is a strong quarter for the real estate and these EPC companies for a lot of new work. So maybe we might see a good up move in those numbers as well. But net, looking at the margin trajectory, that has been good, and they have maintained that self. And remember that JV angle is there, and because of that the operational margins do well, and they are concentrated in Mumbai, and remember land is very limited here, so that is something to watch out for as well. So net, let's give a neutral rating when it comes to the income statement. The second reason is balance sheet, and this is what I like about a player like them. The net debt is roughly zero, and the borrowings, just look at the amount, it's just like a working capital as just on the lower side, and that is where the street finds comfort. And they recently did a fundraise also where a promoter stake was diluted, but nevertheless the momentum seems good. Of course the cash balances are very volatile because this is the nature of the business, but net looking at the debt ratios and a good servicing is a strong thumbs up when it comes to the balance sheet. So we discussed income statement, we discussed balance sheet, but let's talk about cash flow. What's happening here? And of course cash flow is largely, we can see a neutral kind of an approach coming in. There seems to be a downtick in FY25, but 9-month FY26 numbers are improving, and also the operation to cash PAT flow, that has also been decent here. But net for a business model like this, let's take a benefit of doubt in our analysis and give a neutral rating for the cash flow segment. Let's get into the return ratios part. I explained you the margins earlier, and remember the company is also holding its ROC numbers quite strong. For a company like that, having 20% plus ROC is something which is strong, but there is of course a concern. It is slightly falling down, and it depends on the seasonality aspect also, and if the collections start improving, which is expected in FY27, this might come back to that 28 to 30 mark. So let's give it a neutral rating for return ratios as well. Let's talk about shareholding. What has happened? I had mentioned you that the promoter stake will fall down because of the fundraise which has happened. There was a pref and a warrant conversion also, and that is why you are seeing this promoter stake falling to 62%. But interestingly, FIs have still holding their faith in the company. They're having 4% stake, and same thing for DIs, whatever this exposure is. So net it's a neutral rating when it comes to the shareholding aspect. Let's talk about street cred. कि stock में कमाई कितना हुआ, that's the most important thing to talk about. And remember, from the lows in 2026 itself, we have seen the stock going up 52%, but remember there has been a correction also. From 2025 highs, the stock is down 37%. And congratulations if you're holding the stock for long term. Last 5 years you have made 354%. So to balance things out, I'm going to give this a neutral rating. Let's talk about the valuations. So what happens, and this is where I feel there are the attractive valuations. So their 5-year peak valuations, the price to book ratio जो हम लेते हैं वो 8 गुना था. Right now you see it's just at almost 2.5 times. Why? Because the average of these valuations is also at 4.3 times. That means it's grossly undervalued as per its own history. This is the price to book ratio I'm talking about. So it's a strong thumbs up when it comes to the valuations for Man Infra. Let's talk about the outlook and see what happens. Of course, they're expanding in South Mumbai area for the realty projects. This is a very prime real estate of India for the folks who don't stay in Mumbai. Also, the company is in talks with the redevelopment proposals in the Mumbai metropolitan region. That's also the company is looking out for. Of course, the focus mainly is in real estate, but they do have their old legacy businesses like in the EPC also. The company is doing ongoing international expansion projects in US also. That's a pretty much interesting trigger for the stock. And apart from that, of course, going ahead, let's talk about the revenue visibility and the order book also, where the numbers are very much important. The EPC order book is at 300 crore as on December 2025. We'll get the updated numbers once the company comes out with its Q4 numbers. And look at the revenue visibility, 11,600 crore plus for the real estate sales business. And of course, a major chunk of it expected to come from South Mumbai projects. So an outlook is very positive for here, but let's do the revision of the ratings which we are giving Man Infra in our KYC show. Let's see what are the key triggers, and largely balance sheet has been decent. Most of the parameters have been neutral, and if you take a more perspective when it comes to the shareholding and street cred, they are neutral, but valuations are attractive, and so is the outlook, and that is where further alpha could be there, and that is why I've taken out the main reasons why the company is in sweet spot. Let's give in the total addition of the KYC ratings. Number kitna banta hai? It's around 5.5 out of it. It's largely in line to positive on the average of the KYC numbers which we generally give out to. But to understand more and get in more perspective on Man Infra, we'll be joined in by Manan Shah. He's the managing director of MICL Group, and there are some interesting snippets about him. And remember, he has taken the company over in 2013 itself, and the real estate business, what we are talking about, that is where he has founded it and he has scaled it to, of course, a bigger heights as well. And interestingly, he became the MD in the year 2019. That's the date to look at, and that is it. A young dynamic promoter and interesting company, especially with the real estate segment. And joining us, we are having Manan Shah. He's a managing director at MICL Group. Manan, it's always a pleasure to have you here. A very important announcement coming in for South Mumbai. This is a third announcement coming in. Could you give us some more details about it? What's the revenue potential, and what do you think about this entire area and your group's focus on?
Good morning. See, this is the further penetration in the South Mumbai market, especially in Mumbai, where Sobo ideally commands the main, the premium segment and commands the luxury segment. We had the first project, Aradhya Avan, which we had acquired a couple of years back. Then we had the Marine Lines project, and now we are expanding in Tartev as a region. And this project is, intended to start in like next couple of months. We've done the DA basically, and now we intend to launch it in this financial year itself. Things are moving very, very positively in terms of the permissions have already been applied for, and we would soon start breaking ground as well. Regarding the numbers, we are seeing a top line of around 2,000 crores coming in from this project itself, and the total consolidated portfolio of South Mumbai would now become 8,000 crore out of the entire 11,000 crore projection that you mentioned.
It's a very interesting take, and Manan, you are taking the cream of real estate, and of course, as a Mumbai, real estate developer, that is something which we have seen in Sobo. But just wanted to understand the industry perspective. How does the Sobo realty market different from Gurgaon? Of course, it seems like it's less speculative. Also, just wanted to take your industry view also on that.
If you have always seen Mumbai specifically as a location, South Mumbai side has always been in high demand because of the oceanic views, because of the gentry that's been residing there for not just 5 years, 10 years. In fact, if you see the past 50 years track record, South Mumbai has always been like a dream destination for a lot of people across the country. That's the reason MICL is specifically focused on South Mumbai to become one of their pioneer locations where we would be expanding further. We have almost bid for more than 5 projects over and above this, which is on the discussion stage with multiple different societies. And we are seeing very positive signs coming in from societies because the kind of iconic buildings that MICL is doing with the kind of intention and the response that we've received from customers is phenomenal. So I think South Mumbai would definitely be in focus. Alongside Mumbai, if you see how it's different, it's mainly different because of luxury being offered. That's the most important factor. So the sizes of the apartments are significantly larger is what we've always been seeing compared to the rest of the city. So, and South Mumbai is one of the few locations where you get beautiful sea views from the higher floors, and sometimes you are like on the ocean front line also. So that is what is creating that surge in demand to move towards Sobo.
Right, of course, it's an aspirational play, and we have seen that all your 3 properties or 3 projects are expecting 8,000 crore of gross development value. But other than that, other key areas of expansion in Mumbai, and I just want to take that redevelopment angle also. There has been projects across this segment. What are the growth plans looking like for that for FY27?
See, we are standing at approximately around 5.2 million square feet of RERA carpet area portfolio. With the current discussions going on, I am very, very confident that we would be nearly reaching around 7.5 to 8 million square feet in the next upcoming year. And we've kept a vision 2030 in mindset where we are looking at a 20 million portfolio coming in very comfortably across Mumbai city, which includes the US division as well. And right from South Mumbai to western suburbs like Ville Parle, we've been operating. We're operating at Dahisar, Ghatkopar East, we've been operating. We've recently launched a project at BKC, and we are soon going to launch a Pali Hill project also. That is also part of our ultra luxury portfolio. And there are a few more projects under discussion which are almost on the final pipelines, which hopefully we'll be announcing it soon.
Okay, so we'll be announcing, expansions in the Mumbai metropolitan region as well. But just to understand a little bit, Manan, we have spoke about the crude going up almost $120 per barrel right now, and definitely over the last 2 to 3 odd months across the infra space and realty space, there are talks of rise in construction costs. There are of course second order effects coming in. Are you feeling that pinch also? Is the industry feeling that? Just industry perspective I don't want any numbers right now. Q4 is a silent period, I respect that, but Manan, what's the ground reality here?
See, yes, definitely the industry is feeling the pinch right now, but if you see the contribution of that pinch on the overall project cost, it's not even 4 to 5%. So it's frankly, it's negligible. And this curve will also decline soon with situations, becoming better. The temperament of the consumers have also changed a lot. People are now much more positive. In fact, the travel towards UAE has also happened, which is a big significant sign that people have confidence that the war is actually stopped. There's a ceasefire, which has happened since a couple of days, and hopefully it would sustain. So I think the prices of the construction materials would also go down significantly, because these kind of sharp curves we'd seen during COVID also, which I recollect that post-COVID, the steel had shot up, aluminium had shot up. So now I think it's a similar time. It's just a couple of months which, the developers are bearing it. But I think every developer is taking it very, very comfortably, because everyone's cash flows are healthy, and I'm seeing industry being still more positive. And especially India as an economy is much more on the positive side compared to the rest of the world, which is a big positive sign for real estate guys.
Right, but there seems to be one more positive for the Mumbai developers, and I was just checking with my friends, especially the broker friends, regarding, there is a little bit of stoppage in the real estate properties in the Middle East, especially Dubai, and a lot of buyers come from Mumbai itself. Now, are we seeing that trend a little bit of reversing and, coming back to the luxury projects in Mumbai as well? We have seen some good data coming in from Worli also. So Manan, your views on that? Any new inquiries coming in rather than, buying properties in Dubai right now? Has inquiries picked up for South Bombay?
See, all the people who had made money selling gold in past couple of years or made money in stock market, a lot of times they tend to invest in real estate. Dubai was definitely a lot more attractive market because they had all of these 2%, 5% payment schemes which had come in. But with this war situation, people have realized that, like you exactly said, your broker friends have been speaking to you, that investing in your own country is a lot more safer bet compared to, like in outside countries. So I feel that sentiments will continue positively. Even we've received a lot more attraction. In fact, we've been getting a lot of calls in the past 15, 20 days from a lot of brokers, especially the NRI brokers who are focusing on selling UAE or Singapore properties, that they're looking for some luxury portfolio. Even people who are residing in Dubai are wanting to pick up a lot of stock in Mumbai.
Oh, that's pretty much interesting. So the demand, Manan, is coming from NRIs also, and is it coming from other nationals who are generally investing in Dubai?
It's both. So usually what happens, any Indian real estate company who's gone international focuses on Singapore, focuses on Hong Kong, focuses on UAE, and US to some bit of an extent. Now, these people who have been selling multiple properties in those local regions are seeing Mumbai also as a location, because Mumbai has always been an aspirational city and comes in the top 10 in the world in terms of, luxury, oceanic views, and one of the best livable cities. So that is one of the reasons which is attracting consumers, and people have seen the appreciation on the price in the past 3 years. So they are more confident on the price surge also happening, where investors would come back into India and be investing more.
Right. I'll just take a little bit of gears and I'll shift that. Manan, EPC business is also a part of your, portfolio in your company. I just wanted to understand, because you have been doing a lot of port-related work, and the way the government is pushing the port infrastructure, the port economy, especially seeing the current geopolitical situations. How is your company placed in this EPC business, and likely that larger orders will start flowing in, at least for the port segment, because you have a specialization in that. I just saw the history of your family and your business. Just wanted to understand, Manan, how is that shaping up for the company?
So there are two aspects to EPC. Ancestrally been an EPC company, I diversified into real estate barely around 12, 13 years back. So port has always been a pioneer division, and we are one of the only few companies who's done and worked upon more than 8 private ports. We are currently also working on at Nhava Sheva. The port is going on, and the delivery is expected to be soon. And with the boost in the port industry, the kind of Vadwan also coming up, it's a next 10 years, 15 years vision. Company has already eyes on that. We are very aggressive in terms of the tenders being coming out and pitching and bidding for it. And the other aspect regarding, apart from port, is our own real estate division. So we work on our own real estate projects also. And with the 2030 vision, I'm seeing at least nothing less than 35 to 40 million square feet of construction area coming up, which indirectly or directly would hit the EPC division for us.
Right. We spoke about the EPC division also, and Manan, just to give that in perspective, what's the business cycle like for the EPC business? I think the real estate business cycle or the payment cycle is much favorable, and that's of course aiding your company also when I do the SOTP valuation for both of these businesses. But for the EPC businesses, are there any overhangs at times, or the long gestation periods are there? How is that business changed? What was earlier there, and now what you are seeing as a second gen entrepreneur?
So earlier we used to work across segments, right, from ports to industrial estates to other real estate developers. What we've now significantly moved out in the EPC is we do not work for other developers, just as an EPC contractor. So a lot of cash flow control is absolutely in our hands because we work for our own projects. And the other side where we're working for ports or good infrastructure projects, that is something where the margins are also better, and we've got good payment clients, so there is no delay per se. So that's a very specific call which we've taken forward, where we do not intend to work with clients who are not being able to pay me on time, and eventually the margins comparative to real estate in EPC is a lot lesser. So we do not intend to work for other developers at the moment. That's what the principal call has been taken. We will work for our own projects. But regarding good infrastructure jobs and where there are good clients, we would definitely be bidding for those.
Right. Manan, the focus of course, EPC is pan-India, which MISCL group does. But the real estate totally focusing on Mumbai side and the Mumbai metropolitan region. Anything outside this? Are you looking at any tier 2, tier 3 cities, land plotted developments? That's also become the flavor, especially for the HNIs in this tier 2, tier 3 cities. Are you looking at some of those ideas also? Because you recently did a fundraise also, which of course, you're using it in your current purposes as disclosed. But Manan, anything else apart from Mumbai in real estate? And of course, the US expansion is there that you had mentioned a little bit. So you can just give us a view on both of them.
So most specific thing which we intend to follow is we've always been a healthy bottom line making company. So if you see, my profit margins have been consistent across years. Even during our EPC days, the margins were, compared to normal industry standards, much better. Even right now in real estate, we are upwards of 25%. So in Mumbai, a lot of times it happens that my per square feet margin is not even the sale price in these other cities. So I would want to not just create unnecessary volumes. I would like to create better profit margins. And that's the reason the main focus has always been Mumbai as a developer. Regarding second homes, plotted developments, I have seen always curves happening that sometimes it's the flavor of the month and sometimes it's not. And this is a very speculative market to enter. A lot of competition has already been there. I've seen competitive developers buying 500-acre land and 1,000-acre land, but the income is nearly 8 years, 10 years down the line. So the company does not intend to focus something so long term that I cannot encash on it in the next couple of years. So that is the reason we've been away from plotted developments. But nevertheless, we've been businessmen. If the opportunity is great, and if there's some other city which is performing significantly well, MIC would definitely intend to move to other locations as well.
Fair enough. We'll keep it at that. But yes, profitability is important. So is growth. And that's what Manan has stated with us. Manan, it's always a pleasure to talk with you. And thank you very much for coming in KYC, and best of luck for the future. Well, that's the promoter, Manan Shah of Man Infra, talking about importance of realty in South Mumbai and the growth prospects ahead, especially for the EPC business and the residential business. For interesting companies like this, tune into KYC only at NDTV Profit.
केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Welcome, you're watching India Market Close, and as bad as this screen looks, it's actually a good one. This is recovery that you're seeing. 166 points down on the Nifty is better than it's been through most parts of the day. Advanced decline ratio has been negative, and a few factors that are weighing down on the markets. Alex, I would say crude, rupee, that deadly cocktail on top of the mind, because crude spot price is above 112, June futures at 122, thereabouts. Rupee at 95, it's not something the street is going to like.
No, none of those things. And also, let's not forget, of course, we're heading towards a long weekend. And if there's one thing that the street is allergic to, it is uncertainty. It certainly does not want to take over positions for a weekend when one tweet can change the narrative completely. So, intraday chart of the Nifty 50 will showcase what Tamanna was talking about, because we have climbed quite considerably from the low point of the day. We're still losing about 150 points, but it's a significantly better picture than what we were talking about. Before we get to the other aspects of the market, I do want to pull up the India rupee, because this is going to be a talking point certainly as we go through the show. It is off the low point of the day, and remember, the chart is flipped, so that is actually not a good thing. The higher you go, the worse it is. 95.12 is where we are at, and this is likely heading towards a closing low.
You know, I was seeing a figure today that in the last 4 months, FIIs have sold more than they did in the entire year earlier.
2025.
And there is this really no reason for them to come back with this kind of combination. Let's pull up the Nifty heat map for you and see what's holding on this afternoon and what's not. Now, on the winning side, Bajaj Auto, very smart recovery over there. Sun Pharma coming to the fore. IT Pack is surviving. IT Pack is actually doing okay today. So Infosys, Tech Mahindra, HCL Tech, that whole line is fine. Bajaj Finance actually pretty decent numbers, and that's coming through. HUL had an okay set of numbers, but there's again concern with the entire FMCG pack. The question is that can you really continue to move forward? Tata Motors PV taking a knock today, as is Adani Ports, Eternal, HUL. We talked to you about HUL. We heard from the management. The numbers were out today, and the numbers were largely in line. But again, that question about how the impact twofold: one of high crude prices on packaging costs and raw materials, and the other demand getting pressed down. That's also going to come in. So overall, it's looking fairly tough. Nifty contributors, if we can. And really, the only saving grace is coming from your IT pack. Infosys there, 12 points up in pulling up the Nifty. Bajaj Auto as well, while ICICI Bank, L&T, SBI, Axis Bank, all of your banks are down today.
I do also want to pull up the sectoral indices, because that will complete the picture, and you'll see a lot of red on the screen. Perhaps less than morning, only to the extent of the pharmaceutical index popping into the green. But you have metal, you have PSU banks, you have the entire banking pack. I'm looking for the Nifty bank. It won't be too far away.
Yeah.
The private banks have actually recovered from the low point. So there's something there, down only about 0.7%. But the PSU banking index has been a laggard just throughout this week. And that continues to be the case. It's not even earnings that is turning the tide for these guys, because ultimately they are seeing those treasury losses, and the NIM deceleration is evident in a few cases. The question is, has that bottom been hit? And you can't say that, which is why some of the confidence that had emerged earlier on the BFSI pack seems to be dissipating a tad bit.
Yeah, and I think if you want to add one more factor that is maybe not making the markets break out or giving them that much confidence, is that the confusion about the outcome of the 5-state polls. And a short while ago, we had the story about how one of the leading pollsters, My Axis India, has decided not to release its data for phase 2, because they say that 60% of the respondents are not giving them an answer of who they voted for.
Wow.
So if you have just 4 out of 10 telling you who you voted for, you have bad data. And the fact that the voters keeping everyone guessing, I think is quite interesting to actually see. Let's look at the advanced decline ratio and that line graph through the day, and what that is telling you. And yeah, you have the declines quite above. This gap is actually narrowed a bit, and let's see if it continues to do so. So here's what's been happening in the markets. Market recovery is at play, at least in the last half hour, 1 hour or so. The Nifty and the Bank Nifty both are responding. Nifty support at 23,800 to 23,900. The Bank Nifty support at 54,500 to 55,500. The IT pack is holding strength among sectors, even as the rupee hits a record low. That's positive directly for IT because they bill in dollars. Brent crude is at more than 120 per barrel, and investors want to avoid carrying over trade for the long weekend. State election results are on Monday, market holiday is tomorrow, so all of that is also adding to some of the nervousness. I wonder if we could quickly pull up the Brent before we get to our conversation with Jay Bala, founder and chief market technician at Cash the Chaos. There you have it. This is the Brent June futures. Remember, it's not the spot price. That's at 121.75. That's uncomfortable. Jay Bala, for the Nifty, do you see enough strength there to go long for someone who has faith that when this is all over, you will see a rebound and they may have missed the last lot of that opportunity?
That's right, Tamanna. From a medium-term perspective, the markets are bullish, and even from the short term, the markets have a very limited downside. I would anticipating the markets to print somewhere about 23,500 and then recover. The April low is very comfortably sealed, and I don't think the markets are going below it. So my 29,000 objective for the Nifty is still on the cards, and that's I would anticipate the markets to be trading at around 29,000 somewhere around August to September 2026. So I'm bullish on the market. So dips are, in my opinion, buying opportunity.
Let's talk about individual stocks as well, Jay, and good afternoon to you. What's looking good?
Hi, Alex. The best space to be there is the capital goods space. I'm anticipating the Nifty capital goods, BSE capital goods index to scale somewhere about 99,000 from a 3 to 6 months perspective. Your Siemens's, ABB, Thermax, all are in a very good space. And if you want a fresh bet, I would go with something like RR Cables. It's breaking out of an inverse head and shoulders pattern on the weekly time frame. So with a stop loss at about 1398, I would expect the stock to scale fresh record highs closer to 1900 plus. And you also like Wari Energy. So that's also looking good from the capital goods space.
One of the big talking points amidst this conflict has been physical availability of crude oil. Because from India's perspective, considering its dependence on imports, with a major line closed, that is the Hormuz Strait, the question is, how does India source its energy, and specifically crude oil? A report by Kepler suggesting that alternative sources are indeed coming through. In fact, the latest report is that 11.8 million barrels of crude, which amounts to 2 days of India's consumption, is on the way from Venezuela, and it's coming through around the port, the Cape of Good Hope, and into India. We're joined by the lead analyst of Kepler, who is Sumit Ritolia, just to give us a sense of what this means and whether this has been happening for some time and whether it's likely to build going forward as well. Sumit, thanks so much for taking the time. Alternative sources were expected to pan out. This is a suggestion that is taking place. What can you tell us about how important this is and whether other alternative routes also exist?
Yeah, I think that's a good question. And it's not new that India is diversifying, like being dependent 90% of our energy requirement of crude. Like India has been diversifying from quite a few years. And given now the situation around Strait of Hormuz, diversification is very important. And as you pointed out, like Venezuela, it's a welcome move, I think. And if you look at our data also, Venezuelan crude import, India used to import around 300, 400 KBD. And as of now, what we are tracking, in May and April, we might be at 6 years high of Venezuelan crude import. But that said, overall import has dipped, like we see around 15 to 17% of dip, like what India was importing around 5 million barrels per day, 5 to 5.2. As of now, we are importing just around 4.2 to 4.4 million barrels a day of crude. But yeah, I think India has stepped up imports via Russia, Venezuela, and even if you look at overall volumes from Saudi Arabia and UAE, like given the dip what we have seen in March, like April volumes are more or in line with what India used to import, given Saudi is loading their crude oil from Yanbu, that is their east-west pipeline, and UAE from Fujairah.
Sumit, just to understand about this lot of oil making its way from Venezuela via the Cape of Good Hope, would this have been a response to what we've seen with the Strait of Hormuz being closed? Would this have been orders placed earlier? And what is the feasibility really of Venezuelan oil from an Indian perspective, both in terms of the quality and nature of that oil and the distance it takes to reach us?
Yeah, that's a good point. And I think it's a mix of both. India was engaging with Venezuelan producers and the different traders pre-war also. Like if you look at like whatever India is importing in April and whatever India imported in March, that's not of any result with respect to what Strait of Hormuz has happened. Deal would have closed already in February. And given the voyage time, how much Venezuelan crude takes to come off to India, it takes around 35 to 40 days, depending on the ships and all. So yeah, it's a mix of both. And talking about Venezuelan crude mix and what it is, I think Indian refiners are well complex, and it's one of the difficult crude they're out there in globally, like, and not much of all the refineries can process it. So whatever India is getting reduced from Iraq, that again in Middle East, Iraqi crudes are one of the heaviest around, apart from Iran. India doesn't buy anything from Iran. So this is a good replacement, like to like replacement, as Iraqi crudes have dipped a lot. I think India didn't import any in April, and Venezuelan crude import has stepped up. So yeah.
Sumit, the other question, you mentioned that the kind of imports in April have gone up, right? And the question is, what is the mix as things stand right now? And is it likely to shift further? You spoke about the fact that diversification was at play already. These are things that will only accelerate going forward. So what are the sources and what are the routes that are going to be most predominant in this mix in the near term and then potentially in the medium term?
Russian crude is one of the very important strategically, economically, and more of it politically also. Like, given the situation, we have been hearing about some dry outs in some places of India, and if you look at how much India has been importing, Russian crude stands out at around 30 to 35%. It's the core center, and given past history, even at the extreme pressure of US, like January and February, Russian crude was the core center of India's diet. So in the near term, in the short, even in the long term, I think Russian crude will remain at the central part. And apart from that, Venezuelan crude reopening in India's refining mix, it's a welcome move. I think that gives more caution to diversify from Middle East, like since these cargoes and the route is not via Strait of Hormuz. Again, Russian crude, Venezuelan crude, even US crude, I think is one of the factor. But given India's refining mix requirement, it doesn't suit that much. So yeah, I think apart from Middle East, Russian crude, Venezuelan crude, Atlantic Basin, African crude, yeah, they have stepped up well, and that is one of the reasons why I said diversified was already in the mix, and now with whatever the situation around.
Sumit, if we're just doing the broad math, if I have to look at how much of India's crude supply got impacted because of the shutting of the Strait of Hormuz, and how much we've managed to diversify, have we made up for everything that was lost or impacted?
No. I think we are still short by around 800 kbd to 900 kbd. India is not importing anything from Iraq, so that has been lost.
So put that in percentage terms, just to give us perspective. How much of our total volume?
15 to 17%.
So we're still 15 to 17% short of what we require. And is there a clear alternative to this crude being available?
I don't think so as of now. Globally, if you like, around 15 million barrels a day of crude is short in terms of Strait of Hormuz getting choked. I think Indian refiners have been doing their best, whatever they can. And one of the important factor to note is that India is one of the largest exporter of refined product. So whatever we need in terms of refining, we are more than what we consume domestically also.
Okay. So that becomes a question. Now we're going to have to start squeezing in on some of those exports, etc. So Sumit, sorry, one more question. From an Indian perspective, is there any concern or fear that we run out of crude supplies anytime soon?
No, not at all. I don't think so. Even at the height of the war, there was not any concern in terms of our understanding that India is sort of refined product. Not at all. I think India's crude strategy, India's crude volume, refiners are well equipped, even with whatever storage capacities we have. There is not an issue we are seeing in terms of refined product shortages and crude oil shortages for the refining. Yeah, we might not be at 100%, but our requirement for domestic was never 100%. We used to consume around 85 to 90% whatever we refine.
All right, Sumit, absolute pleasure speaking with you, and thanks so much for that clarity of thought. It helps us as well put things in perspective.
Yeah, thank you.
All right, let's talk about Nalco and earnings front and center, because you're seeing the reaction play out. This is, of course, the first cut we're getting you off the Nalco numbers. The PAT number coming in at 7.3% higher, 1,718 crore rupees. The revenue seen an uptick of about 6%. The EBITDA has also grown by about 7.4%. These are all sequential numbers that we're talking about. The margins coming in slightly higher at 46.8% compared with 46.6%, 46.1%. More than anything else, I think this is likely to be a situation where it's missing the estimates on a couple of those factors. Pull up the intraday chart for Nalco and you will see that it's dropped quite precipitously from where it was, now trading with cuts of about 6% as well. We've got Sameer Dalal of Natvarlal and Sons Stockbrokers joining us right now. Sameer, thanks so much for taking the time. On Nalco specifically, it's seen a pretty sharp drop on those numbers, and the numbers flashing on the screen, I've just read them out as well. If you've looked at these, what seems to be the reason why the street is disappointed?
I actually haven't looked at the numbers, so I mean, to comment on the numbers would not be right. Having said that, look, everyone's been talking about the fact that the aluminum and alumina prices have been rising. Now, I know Nalco does a lot of exports and a lot of sale of alumina. And because of the aluminium refineries in the Middle East probably being shut, it could have impacted their last month's sales with shipments and payments or whatever and delays. So it could be because of that, but I don't have an answer because I haven't seen the numbers.
Sameer, we'll come to you for more on what you're expecting in the markets, but I want to just talk about and to Enviro Infra. They're a leading player in the water and waste treatment sector through their subsidiary EIE Renewables has entered into a share purchase agreement to acquire controlling stake in Suyog Urja Limited. That's a wind energy EPC company. Manish Jain, MD of Enviro Infra, is with us to talk more about this development. Mr. Jain, thank you so much for your time. Tell us about the stake in Suyog Urja Limited, the cost of it and the strategic importance for you.
Good afternoon and thanks for having me. The acquisition of Suyog, it is a strategic step and it aligns with the vision of the company in developing itself across the various sustainable segments. We started this renewable company in around 1 year back, and within a year, we have developed ourselves across 3 verticals of the renewables, which is solar, BESS, and wind. So basically, we are aligning all these segments so that we can further move on for the hybrid solutions in the renewable segment.
What is the timeline for integration, sir, with regard to this this agreement that you've signed? So it's a share purchase agreement. When will the transaction be completed, and what is the integration plan?
51% of the shares have been acquired already. This acquisition has happened yesterday, and the balance 49% that will be acquired over a period of 2 years. So there will be 2 components. A part will be purchased in the next financial year after the performance in FY27, and then the rest of the portion will be acquired in FY28. So this is how the acquisition will get completed.
Mr. Jain, also talk to us about how this is going to be funded, both the initial tranche that you've signed yesterday and the remaining stake.
The total deal size as we envisage is 3,311 crore rupees, and the first tranche is 111 crore. The entire deal is going to be funded with a composition of equity and debt in 50%, and so we'll be going for a debt of somewhere around 55 crore for the first tranche, and similar will be what will be through equity and the internal funds of EIE Renewables. The best part of it is we had invested 75 crore from Enviro Infra in EIE Renewables, and we still maintain that level. And there is no further investment which is further happening from Enviro Infra to EIE Renewables. It is from the internal resources of EIE Renewables only.
Okay. And so at the peak, once you've taken on as much debt as you need to complete this transaction, what will the gearing levels be? What will the ratios be?
It can be slightly heavier as we say renewables. The total debt size as we envisage will look like somewhere around 400 crores. And the total investment in form of equity and CCDs was 120 odd crores, with the So the profit margins which may get added, so 200 crore can be the equity size which may look in the FY27 balance sheet, and 400 crore. So it will be 2:1, that which can be the debt to equity.
Okay. And so therefore, if you are to look forward, Mr. Jain, and just give us a sense once the entire integration takes place, and you're talking about now 2 financial years, right? So how will the group then look? What will the revenue profile look like if you were to talk about, say, in the 3rd year when you've completely consolidated? What is the plan?
So we look forward to this segment as a consolidation of renewables with solar, wind, and BESS. Right now, I do have an EPC order book of 1,000 crore plus from the BESS segment, which is its EPC, and then another 150 odd crores, which is an IPP, which we have acquired recently. Apart from this, wind EPC segment order book is somewhere around 650 odd crores. So if I say a revenue of somewhere around 800 crore is what we are expecting in the current financial year, and a growth trajectory basically for the first 2 years, the trajectory will be means the sales growth will look quite high, and then it will get stabilized. So I can look forward maybe to a revenue of around 800 crore and then 1200 crore for FY28. So this is how the entire integration would look like. There are a lot of opportunities which are now available in the wind segment. The BESS segment is also growing. So basically, this is how we look that the entire integration will happen and we can grow in totality in the renewable space.
Got it, Mr. Jain. All right, wish you all the best for that transaction and indeed the path that you've laid forward. Thank you so much for speaking to us.
Thanks a lot.
All right, let's talk about the other stocks that you should keep on your radar, and particularly in this segment that you probably look forward to. It's heard on the street. And Somit Sarkar joining in to tell us just that, what he's hearing on the street. Somit, market's a little bit cautious ahead of the long weekend, but what are the individual stocks you're hearing about?
Actually, not much of an action that we are seeing in dealing rooms today, given the fact that it's a long weekend and state election outcomes are expected on Monday. So traders are keeping their position light. They're not going in heavily long or heavily short on any of the stocks or index. Now, apart from that, even if you look at the volumes, they are quite muted in trade today. Volumes are in fact down nearly 2% compared to what we had seen the previous day. Now, despite this, dealers have given some stock-specific ideas or actions that we are seeing. Firstly, on MCX, dealers indicate that there are some sell flows coming in on the large HNI desk on this counter. Dealers indicate that the premium value has fallen sharply for MCX in the month of April, and this could mean to lower revenue for MCX in the first quarter of FY27. Apart from that, it's Crompton where they are seeing some buy flows on the PMS desk at the lower levels. They're expecting strong Q4 numbers from this counter and some buying action on the DI desk on insurance names like SBI Life, HDFC Life and ICICI Lombard. There are buy flows on the DI desk. Delivery volumes are also expected to be on the higher side.
Okay, so delivery volumes expected to be on the higher side is also an interesting point to note right now, though some nervousness in the markets, and like we're saying, it could be a mix of factors coming in. We've also talked about the political factor coming in because we're waiting to hear on what's happening with the 5 state results on Monday. Gargi Nandi Roy, political analyst, joining us for her take. We're trying to get you all kinds of views this afternoon on India Market Close. Gargi, thank you so much for speaking with us. The big outcome, at least of the exit polls, seems to be that no one is sure what's happening in West Bengal.
Yes, thank you, Tamanna, for inviting me. But surely, Tamanna, this time there is a mood for change.
Okay.
And I think out of the 7, at least 5 exit polls show that BJP is coming to power. Now, I'm not an astrologer, but surely I know the mood of the people. The people do want a change. See that what we have seen in 2011, when there was a change, that same kind of mood is there. Only maybe that chunk of Muslim vote which got transferred, this time it is not getting. But this time it seems there will be a change because you are a profit channel. You talk about markets and you were talking about markets before me. I think obviously if BJP comes to power, Tamanna, for markets, it will be a good news. I think you'll see some rise in the stock market and Nifty. And
but you know what, Gargi, you're right. You're very right in saying one thing, that neither you are astrologer, neither are we. The fact that one major pollster is not putting out the polls today might lead to some of that question mark. Just want to understand from you as a political analyst, what is the significance of these 5 state polls? Because nothing really changes in the center or any impact on policies.
No, but I think I'll first come to Bengal. See, I think Assam, we have seen how Assam has grown in these last 10 years and all. And just under Hemanta Vishwa Sharma, semiconductor industry came to Assam. So if there is industry, if there is manufacturing, obviously it is good for the market. Coming to Bengal, Tamanna, Bengal in this regime, under this regime, has seen exodus of 6,668 industries, 18,450 MSMEs closed. And this is not that it started from Trinamool era only. It started from this left era. In the left, because you know the left politics was such, they demonized enterprise, they glorified poverty. So there was an exodus of industry. I can name some of the greatest big names in which who had factories in Bengal and which left Bengal, like Hindustan Motors, or closed. But Hindustan Motors.
Okay. All right, we're running out of time, Gargi, but thank you so much for joining us today as, we look at what is going to be the impact of polls. One of the many things. Now, markets is something that we need to cover right now, but we hope to speak with you again soon, Gargi. So thank you so much for coming in. I actually want to come to Sameer Dalal on what the market mood is right now. Sameer, what is the biggest concern as far as you see on the markets? We've seen some recovery, but do you think top of mind continues to be the price of Brent and the rupee?
Oh, absolutely. So for the market, I think that is something that you have to focus on. When you have $125 a barrel, you think of the negativity that's going to happen for the oil marketing companies if they don't increase prices, right? Because at the end of the day, they're going to sell it at a huge, bigger loss than they're already selling. Now, the alternative is if the government takes a hit on its taxes, it hurts the government financial, or you raise the prices at the petrol stations, which hurts inflation and consumer consumption. So it is a very, very negative factor. I'm actually a little surprised to see the resilience in the market, given that crude is at $126 a barrel. I guess the expectation is that this is going to be short-lived. But, we've been saying for this war from February, well, not February, but March, early March onwards, it'll be short-lived. And we are now almost at the end of April, and 2 months down, there's no sign of anything changing. So, how long can you keep living on hope? Second, when you have had crude prices so high for so long, it is going to create problem in the value chain of the downstreams. And I think you're going to see those in the numbers in Q1. So I think the market needs to brace for Q1 being a little disappointing. And the minute that happens, yearly full year target estimates need to be downgraded, and then the market is going to look expensive. So I would be a little cautious on the market right now. I think unless something changes really fast, I think we need to be worried.
All right, yeah, that cautiousness also pervading Dalal Street as we speak. Jay Bala, on that note, I think we have to thank you. And I apologize, it's been that kind of a show. We haven't gotten too much time to speak to you today. Hopefully, we will be able to remedy that the next time we speak. But we slip into a very quick break. We're off the low point of the day. At least that's something positive to talk about at the end of the trade. We've got half an hour to go. Let's see where we end. Stay tuned. We'll talk about more stocks on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world.
Welcome back. Markets are in slight recovery mode but still feeling the heat. Meanwhile, let's look at what Smartworks has done. Smartworks co-working has seen its strongest quarter ever with double-digit revenue and EBITDA growth. What's worked for this company? You saw that big spike when the numbers came in and then, of course, falling prey to the mood of the markets overall. But Nitish Sarda, founder and MD Smartworks, joins us now. Nitish, thank you so much for speaking with us. What has worked for you this quarter at a time maybe when it's not really clear whether that kind of growth in co-working spaces can come in? What has boosted your numbers?
I think we're seeing a lot of, thank you, Tamanna, for having us on your show. I think we're seeing a significant amount of demand coming in for flexible spaces for a platform like Smartworks, where we're able to give a customer a standardized solution across the country. If you look at our numbers, we're getting in, we've increased our revenue by about 31% this year from 1,375 crores to almost 1,800 crores. With that, our EBITDA margins have also significantly increased from 175 crores to almost 314 crores. This demand is actually coming in from all directions. If you look at the market currently, GCCs, global capability centers, are driving a significant amount of growth in the Indian RE space, followed by Indian homegrown companies who are also going ahead and taking up more and more space. Whatever is happening across the world, but if you look at the absorption of office space in India, in the first quarter of this calendar year, we have absorbed the maximum amount of space that we have ever done across our history.
Which is what I wanted to understand. What is there? Has there been a change in strategy? Is there something different that you're doing? Because across the board, there has been an increase, right? Your net seats leased is up 68% year on year. Effectively, that is why you've swung from a loss to a profit, though your EBITDA margins are down. So has this growth come at a cost? Has your acquisition cost gone up? Can you explain to us the semantics of how you got here?
Our EBITDA margins have actually significantly increased. If you look at our EBITDA
No, I'm talking
last
about consolidated year on year.
Yeah, so consolidated year on year, if you look at our EBITDA margins last year, they stood at a normalized EBITDA of about 13.75%. This year, we're ending at about 17.5%. This NDS EBITDA margins would be affected through some of the accounting entries, and this doesn't account for the lease payments that we do. The normalized EBITDA margins is what stands at almost about 17.5%, which is a 300% bump up from what we were last year. I think this growth is driven because of the value prop that Smartworks as a platform is providing. If you look at some of the larger enterprises which are moving in, we have more than 37% of our revenue coming from 1,000+ seater deals who are committing to long tenures of 47+ months. So the predictability.
I just want to go back to you on the EBITDA margins because we need to understand this. So your EBITDA is up 45.6% at 338 crores versus 232 crores. This is correct?
175 crores last year. The normalized EBITDA stood at 175 crores.
No, you're looking at normalized EBITDA. I'm looking at just the overall number. When you say normalized EBITDA, how are you looking at it?
So there are two EBITDAs. There's an NDS EBITDA, which the company reports, which includes all the accounting entries. And then there is the normalized EBITDA, which is net of the accounting entries that you need to do, which are non-cash in nature. So the NDS EBITDA is what has significantly increased from 13.5% to 17.5%. The reported EBITDA, which you see on the balance sheet, despite the base increasing, it's increased from 200 and something crores to 314 crores.
Okay, so in your reported EBITDA, that is where the margins are looking a little squeezed. You're saying that your normalized EBITDA is much better. So what are those accounting entries that you think is causing this difference?
So these are accounting entries which come in with respect to the lease equalization reserves that you need to create. These are accounting entries that with respect to some of the accounting entries which are non-cash in nature. So they don't have any impact on the cash flows. If you look at our OCF for the year also, they are very, very healthy with a 314 crores in EBITDA. Our OCF stands at 10% higher than that, closer to about 345 crores.
Okay. Hi, Nitish, this is Alex here. I'm wondering about the addition of space that you are planning in FY27 as well. So you've ended, where do you end at FY26 and where are you going to end FY27 at?
We are ending FY26 at 10 million square foot of operational space. This makes us almost 1% of India's commercial real estate space and 10% of the flex space across the country. But if you look at our committed space take-up, we've already increased our committed space take-up to 16 million square foot, which means that currently the 10 million for the next 2 years, we have almost locked in all the supply that we require to grow at the 30% mark that we're looking at growing over the next 2 years. That supply is already blocked with the 16 million square foot, which is we've gone ahead and committed to. 10 million out of that is operational. The remaining 6 million is going to get operational over the next 12 to 24 months.
So, and if you were to talk about the yield that you're getting in FY26 and what it will be in FY27, and as you pointed out, you've locked in supply, give us a sense of the trajectory on yield as well.
So, on one side, we've locked in the supply. We've also gone ahead and locked in the revenues. If you look at our committed revenues today, we stand at almost 5,000 plus crores of revenue locked in, which means that even if we don't do a single deal from now, we still have over the next few years going to get over 5,000 crores in revenue. In terms of the the total locked in revenue growth, you will see that at 88% of our current space is fully committed to. Whatever new space is going to come in is what is going to incrementally increase our revenue and vis-a-vis increase our margins from there.
Okay. And finally, FY27, you've actually turned profit in the last quarter. What is the outlook for FY27?
So we think, we've grown almost 31% year on year on our revenue numbers. Our EBITDA margins have gone up by 75%. We started the year with about 13.7% of normalized EBITDA, which today stands at, in this quarter, at about 19%. I think revenue growth of 30% with a stabilized EBITDA at 19%, which is what we are exiting the last quarter at, is something that we are fairly confident of achieving next year.
Okay. All right. Well, thanks so much for taking the time and wish you all the best for FY27.
Thank you. Thank you so much.
On this side of the show, we've got Rajesh Palvia, Axis Securities, as well as Samir Dalal of Natwarlal & Son Stockbrokers. Samir, quick view, because we've got a packed show, lots to talk about. What do you make of Smartworks?
Company is interesting. Haven't studied it in details, but I mean, look, what they're doing is renting out space and re-renting it out at a smaller lots, and because of which they're able to make returns. But we need to see it. I mean, I haven't studied it, but we need to see how they grow over the next few years.
Rajesh, I want to talk to you about a couple of stocks here, Nalco in particular, and maybe the rest of the metal pack as well, specifically, because it took a bit of a hit post those numbers. How does it look?
Yeah, so Nalco has now broken its 20-day moving average, and looking at the supply pressure now, I think this fall can continue further. On the downside, stock may test a level of 385, 388 kind of zone, which is its 50-day moving average support area. Though long-term structure is bullish, but yes, some pressure is there on the near-term chart. So maybe it could slide further another couple of percent, like 385 to 389 would be the next level to watch for. If it's not able to hold 385, then we may see further more downside towards 375 also. But looking at the overall structure, we believe that stock will attract again buying interest around 385 zone. So those who wants to buy, wait for another 2 to 3% kind of correction, then one can deploy some long trade around those levels.
Okay. Nalco in focus, but I want to talk about HUL with Samir Dalal. Samir, have you looked at HUL numbers?
Yeah, I did look at those.
Okay.
They were decent numbers, just because the stock was, I guess, fully priced or a little, well priced. The stock is seeing a correction, but the numbers, nothing wrong with them at all.
So do you think you would buy it at this level? Because what you're saying is a profit booking, right? Do you think HUL is a good buy, considering we don't know what's happening with crude prices, packaging costs, demand, etc., etc.? But do you think FMCG and especially HUL, with what their performances look like, is worth building positions in?
Okay, so Tamanna, there are two things. One is results being decent and in line, and the second is whether you buy something because value is fair or growth is there. Those are the two components, the two primary components that you've got to look at. So when you look at HUL as a company, ROE, ROC, fantastic, right? No questions asked. The problem is growth going to be there? That is where HUL has had a bit of a challenge. They're growing at low single digits. And when you command a PE multiple of 40 growing at low single digits, then you got to hope for margin expansion, which will compensate for that high valuation. Can't keep having that happening. At some point, competition is going to ensure that comes down. So that is the bigger problem that we have. Growth is not there and valuations are rich. And that is why, even though the company's quarterly numbers were good, I'm saying the stock corrected because everything is well priced in. Would I buy it? No, I wouldn't. I still find valuations expensive. Maybe closer to 1800 is where I would probably initiate looking to buy it. Would I sell it? Because if you're a long-term investor, no. But I would not buy it at this point of time, for sure.
Okay. Let's go across to my colleague Mahima, I believe, joining us right now to tell us about HUL and the trajectory for growth.
No, this is actually Mahima speaking with HUL at the press conference. So Mahima had the opportunity to ask the HUL management about their numbers. Listen in.
My question is on volumes, because this time it's a 15-quarter high number that you've seen, right? Considering that you've said that you will be taking, calibrated price hikes, that could impact volume going forward. But at the same time, you've also said that, growth is our top priority. So going forward in FY27, I know you will not talk numbers, but any range in which you will be seeing volume growth coming forward?
So firstly, we won't offer a short-term guidance, right?
Yeah.
But let me get into firstly, what's the step up we are seeing?
Yeah.
I think the first thing is, what are we working on? The first is fewer, bigger bets. We've talked about this before, we will continue to focus on scaling up a few priorities so our resource allocation is becoming sharp. So that's the first thing. The second is working on our brands, modernizing them, premiumizing them, both in terms of communication, but also in the segments in which our brands play. Creating higher exposure to the higher growth segments is what we're working on across all our brands. Remember, HUL, we have 20 large brands and 55 total brands. So across our brands, really systematically ensuring that our brands we step up. The third is in terms of building the capability of our channels, really doubling down behind execution, because it's much more an omni-channel market India than ever before. So whether it is QCom, e-commerce at the top, or actually we are now investing also in general trade. So we're actually investing in building our footprint in chemist channels and open format general trade stores, and we have created a new specialized force to go to market in these channels. That combined with, continuing to drive our leverage, our operating leverage, is what sets us up for the next year.
Okay, all right, still pushing that volume growth. Let's see if it pans out. For now, let's turn back to Nalco. It's under pressure after its Q4 results, and Mahima joining in to talk about what may not be working because it's fallen off a cliff there. Mahima, there's still growth, but is it a situation of not meeting those expectations?
So, Alex, what's happened is that overall, if you take a look at the QOQ numbers, which we generally take for metal space as a whole, right? They look, decent when it's compared to on a QOQ basis. But if we take a look at the year-on-year number for Nalco, I think that's where the problem is. In terms of revenue, that's fallen by 5% year-on-year basis. And this is despite of the aluminium prices, uptick that we saw in the last, couple of days. In fact, almost March month as a whole did see an uptick in aluminium prices because of the West Asia conflict. Even in terms of PAT, on a year-on-year basis, it's fallen by around 17%. Other expenses has inched up quite a bit, almost a 31% uptick, and that has impacted the year-on-year margins as well. Stock, of course, did see a run-up on the back of aluminium prices going up, but overall, I think most of it, today is also on account of profit booking that we're seeing on the counter. But on a year-on-year basis, revenue saw a downtick of around 5-odd%, EBITDA saw a downtick of 14-odd%, and margins also down by about 600 basis points. I think the street right now is probably looking at the year-on-year numbers and not happy with regards to those numbers, and that's why we're seeing that stock tanking in trade today.
To see all perspective, so when you're looking at year-on-year, it's not looking as pretty as it did. Sameer Dalal, how are you feeling about IT? One segment which is holding on to its space today. In a tough market, and a weak rupee actually is not a bad idea for IT companies. A strengthening dollar is not necessarily the worst news for them.
Yeah, so it leads to great profitability increase, but that doesn't change the dynamics of the company when it comes to whether business is going to continue to grow or not, right? So for IT companies, why they're holding out is simply the fact that they've already fallen so much. There's very little room for them to continue to fall. In fact, valuations are now at, I would say, fair value multiples, right? So that is one of the things. Second, the bigger problem in IT, which I've been saying for a while, is the fact that growth is going to be very subpar. You're talking of companies going as low as to -2% and as high as to about 7-8%. And of course, then you have outliers like Persistent and Coforge who are higher. But having said that, why should companies that are growing at 5 to 6% top line, yes, they're getting benefit of the currency fall, so margin expansion and profit growing, maybe 7, 8, 10% growth, trade at 20-10 because your core business is only growing at 5, 6%, right? So what I've been saying for a while, I stand by that IT is a great bet to have from a point of view against a fixed deposit because you'll get your 6% div yield, 5, 6%. Plus, if the stocks go up by 4%, you walk away 10, 11%, which is going to be long-term capital gains tax, which is far better than an FD, which is taxed at the highest tax slab. So from that perspective, IT is a great investment. From an equity perspective, taking the risk in equity, I don't think IT is going to give in the next year and a half significant returns. We will have to keep monitoring how AI integration is done by IT companies for its clients. And that could be the game changer, which we'll know in the next 1 year. Is IT dead? No, it's not. It's just that it's going through a 2-year period of a lull, I think.
It's the first time I'm hearing IT being compared to a fixed deposit, though, I must say, Sameer. Having said that, Rajesh, I come to you on any short trades, and I don't want to say BTST. because it's a long weekend. I don't know how appropriate that would be. So particularly in these times. So what short trades would you suggest?
So on the short side, I think Indigo, Interglobe Aviation, one can look to go short as stock has already broken 20-day, 50-day moving average. And looking at the breakdown on the near-term chart, if it continues to trade below 43.70 kind of zone, I think trajectory is on the lower side, and we may see lower target of 42.70 also for Indigo. So this is one stock which is coming in mind on the short side. Again, another stock that is from the metal space is, taking some hit. Hindalco is correcting from the higher level. If I look at the near-term structure, there is a breakdown of upsloping trend line on Hindalco. So looking at the structure here also, we may see some more profit taking to initiate. We are projecting target of 1,000 on the downside. Stop loss needs to place at around 1,055.
Okay, there are some ideas for you. Would you look at Nalco at all, Rajesh?
So Nalco, we are waiting for 389, 385 level where stock is having major support area. So till that level, yes, slide can come. But if it's break below 385, we may see furthermore liquidation towards 370 zone.
Getting beaten to a pulp right now in closing trade. Just a few minutes left to go. All right, Adani Ports and SEZ reported a 25% rise in revenue for FY26, exceeding its guidance of 38,000 crores. EBITDA rose 20% ahead of its stated range, while the company handled more than 500 million metric tons of port cargo in a year for the first time. Listen in to Ashwini Gupta, whole-time director and CEO, Adani Ports.
Hello, and thank you for supporting us by having confidence in growth of APSEZ. We said 500 million metric tons, and India, along with our global businesses, delivered. This is not an operational statistic. It marks an India infrastructure movement. Now, I present another strong performance by APSEZ for FY26. Once again, we have exceeded our own guidance. APSEZ outperformed the upper end of revenue, EBITDA, and CapEx while closing with net debt to EBITDA at 1.9x and a ROCE of 16%. Another evidence of our healthy business growth with financial discipline. FY26 revenue grew by 25%, EBITDA grew by 20%, and PAT grew by 16%. During the year, we faced challenges and disruption. Operation Sindoor, geopolitical disturbances, and West Asia crisis. Still, we delivered, serving the nation by handling multiple challenging vessels like LPG, managing transshipment overflow from Middle East to hit 500 million metric ton.
Okay, all right. So that's the word coming in from the management of Adani Ports. Standard disclaimer, of course, NDTV Profit, part of the NDTV Group and also owned by the Adani Group. Samir, quick view on Adani Ports. This is, of course, you've seen the numbers, and there is also a benefit that seems to have come through with regard to the use of the Vizhinjam port as a transshipment terminal because of the way that some of these routes are shifting. What's your view?
So fundamentally, again, good numbers. Like you said, there is a few one-offs, but that is okay because, look, at the end of the day, this is a business which will constantly have changing dynamics. If this war in the Midwest, continues for a little longer, this business will continue for longer, allowing profitability to grow. Again, same problem I face with this stock, which I face with the, I know your channel is owned by the same group, but I still say, great business, valuations are not great. For a business that is delivering ROCs of only 15-16% for trading at about 45-50 times forward earnings is very difficult to fathom. If not for that, it's a great company to invest in. So if the stock ever corrects closer to maybe 1,200, that would be the time you should go in and buy. But beyond that, I can't recommend a buy at 1600 to expect returns from him.
Okay. All right. Well, let's talk about several stocks that you should watch out for at the end of trade. And in fact, on that note, let me thank both the gentlemen who've joined in today and for giving their views. Pleasure speaking with you as always. But pull up the intraday chart for the Nifty 50. We're off the low point of the day, certainly, but we're still down about 150 points, more or less where we started this program. So again, pull up the intraday chart and you'll see what I'm talking about. We're significantly off the low point of the day, which was midway through the trade, and then you've seen a little bit of a wobble towards the end of the trading session. Heat map for the Nifty 50, and you'll see more green on the screen than you did at the start of trade. About 13, 14 stocks that are trading in the green right now, led by Bajaj Auto, and the buyback news coming through that is beneficial for the company as well as its shareholders. Sun Pharmaceuticals, Infi, and the tech pack doing okay. Reliance Industries bouncing from the low point. It seems like there is a little bit of deployment of funds, if anything, that is causing a few of these heavyweights to move up. Metal Pack is under pressure today.
Metal under pressure. Those Nalco numbers have not helped year on year, definitely. You're seeing Hindalco also taking a knock. In fact, I don't know if you can get that dual chart with Nalco and Hindalco with the intraday. That'll give you an idea. May 6th is the Bajaj Auto buyback. They'll also announce their results on that day. Bajaj Auto is going to be in focus because remember, they're celebrating 100 years of existence of Bajaj Auto this entire year. So maybe they're a little generous with investors.
And they have the cash.
Buyback. They have the cash. All right, Nalco. Let's look at the Nalco intraday and the Hindalco intraday if we can, and both of them, and see if there is a pattern that we can see there. Look at that. They're mirroring each other because the Nalco numbers came out. The year-on-year number is bad. That stock is down 8.5–9%, and then Hindalco follows the same pattern. So, which is why you're going to see Hindalco under pressure. We had one of our analysts recommend Hindalco as well. So, that's maybe what you should look at. Let's pull up the sectoral heat map very quickly as we're closing off this Thursday afternoon. It's a 3-day break from markets. Markets don't want to go into those 3 days not knowing what's going to happen next. Nifty Metals hurting, Nifty Realty hurting. Water with a 0.5% uptick, as is pharma, but overall I would say, Alex, this is water with a 0.5% uptick, as is pharma, but overall I would say, Alex, this is a street which is nervous. This is a screen that is showing nervousness more than anything else.
Absolutely. Just to close out, pull up the advanced decline ratio because you will likely see a widening even, actually, okay, it's not too bad. It's more or less where you were at the start of this program. It's had a little bit of a widening and then a closing again, but you're closing with the declines in the ruling seat. Speaking of ruling seats, there's going to be a lot of that chatter over the weekend heading into the results on Monday, and that's the other thing that we're going to have to talk about, of course. It could lead to a sentimental move on Monday.
If at most, and lack of other things in place, I would say that it's either going to be Trump as the topmost headline or Mamata Banerjee. We don't know which one and whether it's going to be a good one or a bad one. So it's going to be interesting to watch in any case. But any poll impact on markets, especially state polls, is usually sentimental and temporary. Definitely a factor to watch out for. That's all the time we have, but don't go anywhere because we have editor's cut for you just in a short while ago. And our guest editor today is Gautam Shah. He's going to be joining in Alex Hiral and me to talk about what he thinks is going to happen in markets next week. Don't go away.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Welcome, you're watching the Editor's Cut. This is where we talk about what the week has been like and what we think is going to happen, and it's basis all of the experts we speak to, because I was just thinking about it, folks, that we end up speaking to such a whole variety of people through the week, right? It's analysts, people who track markets, mutual fund money managers,
this week
companies.
Has been political analysts as well.
And political analysts as well this week. And so, we can just put together a sense of everything that we're absorbing and putting through. And I think one big takeaway for me this week is that there is confusion. If I was to say what is the word of the week, it's confusion. Whether it's on exit polls, whether it is on the question of has the street priced in the Strait of Hormuz and the US-Iran war, on whether there's going to be a deal or not. There is just, the whole narrative changes every day. And confusion prevails.
And one more word I would want to add to that is tension. I think now that has started to creep in. All this while we were not seeing people who were really tensed about the situation. I think that's coming in as well with the confusion.
I think to a certain extent also people are feeling it because March was horrible, and then the month of April has been really good for your portfolio, right? You were crying for a little bit of assistance and anything will do, but it's been a pretty healthy jump, particularly at the broader end of the spectrum, where within touching distance 3-5%, less than 5% for the mid-cap index, about 6% from the 52-week highs from the small-cap index, and that's at the index level, so your portfolios would have likely looked better.
Yeah, no, I mean, there have actually been some stocks which have seen a 30 to 40% jump in this entire 8-9 weeks. But as we're getting into the third month of the US-Iran war, things are looking unclear. And I think the question, and that's really my take this week, the question now is, how long can we hold on for? We had a guest this morning who actually said, I'm scared. And this is a very optimistic guest, and you know who I'm talking about if you watch this channel. The fact that Brent June futures have hit $122 a barrel, the peace deal is elusive. Trump is saying, why should I take an 18-hour flight to talk to the Iranians when I don't agree with anything they say. The question now becomes is how long can India hold out on passing on these prices and seeing any real impact? The analysts we're talking to are talking about 2 weeks more. Something needs to give in another 2 weeks because there's no second order impact on grounds so far. This could change quickly. Now, the other factor really is Q4 results, right? They're positive in part, and then there's a celebration on the street. Any company which is given good results, you see that stock spike up. Investors are coming in and, thumping the table on it. But that data now seems redundant. More and more, what a company has done in the fourth quarter or the last financial year doesn't seem relevant right now. You have the managements all sounding optimistic in conference calls. There was one management who said that our tailwind is, for example, asset quality, even if the geopolitical situation is bad. I'm talking about Bajaj Finance here. But can anyone be sure of a resolution in the US-Iran war? Not really. And the other thing, folks, of course, is 5-state polls. And you were asking me about this, Alex. Any response from the market will be sentimental and temporary. There might be a reason to really come in and, rejoice or be in a sour mood depending on it, but that'll be for a short time. The fact that there's uncertainty is also a big question. That's why I said confusion. Your major pollster, My Axis India, today has come and said, I'm not putting out my results.
And the reason is very interesting.
Yeah, because he's saying 6 in 10 people don't want to tell me how they voted.
Is that telling in itself, Tamanna?
I think it is. I think it is because there's fear one way or the other. And there are two aspects of fear in these polls, right? One aspect of fear is, and this is why maybe you also had a high voter turnout, that if you didn't vote, then would you still be seen, identified as a citizen? And then, of course, because the incumbent in that state has such a huge grip, do you want to let anyone know that you may not have voted for them? So it's a dual fear mandate, and in the lack of any clarity, no one wants to take a guess. Even someone whose job it is to actually tell you what they think has happened.
But I completely agree with the idea of any sentimental bolstering on Monday will likely be short-lived if that overarching problem does not go away. And in fact, you were talking about crude oil prices. The mirror to that is rupee and the way that rupee has gone. So I was pulling up a little bit of information. India and the rupee has been the worst performing currency by a mile in 2026 so far. So take a look at this. You've actually underperformed the Turkish lira, the Peruvian sol, Indonesian rupiah, and South Korean won, all of which have fallen between 4.9 and 2.8% in 2026 alone against the dollar. And I'm talking about, for example, the best performing currency is actually appreciated. That's the Brazilian real, has appreciated close to 10% against the dollar in 2026. The Australian dollar and the Chinese renminbi have appreciated 6.8 and 2.2% against the US dollar. Since the 1st of Jan 2025, that is the previous year, the drop is as much as 10%, and only the Turkish lira and the Argentine peso have depreciated more against the dollar since that time. So in this context, and asset allocation is obviously key, but when we're sitting here in India, the average retail investor, Tamanna Hiral, has relatively less ability to invest in equities in various markets. You can go through GIFT, but that mutual fund route is restricted to a large extent, and they are opening and shutting depending on the flows. And so therefore, gold becomes a very, very important hedge that everyone should consider having in their portfolio. Of course, investment advisors in any case say that you should have about 10%.
That's interesting. So you're making a case of the comeback for gold.
I am certainly making the case. In fact, gold should always be a little bit part of your portfolio. The argument against it comes from the fact that people say, oh, it's not productive and all of that. But if you think from India's perspective, it's important because first of all, we're a price taker of gold, right? So whatever gold prices are globally, that will reflect on your ETFs. But if you look at the ETFs over the course of the last decade, and you map out the depreciation of the rupee, you will find, and you compare it, of course, to a dollar-denominated gold ETF globally, or just the gold price, you will see that the ETFs in India also reflect the appreciation of or the depreciation of the rupee. So if you look at 2026 and you say gold prices in the international market are up, 7% or thereabouts, then if you calculate close to 6% depreciation of the rupee, if you invested in a gold ETF at the start of January, chances are that your return will be over 10%. So even in that context of a relative underperformance of equity, you've been held in good stead because a part of your portfolio is in gold.
But the argument over there, Alex, is yes, gold is usually taken as a safe haven in war situations. The spoiler to the party right now is what's happening with crude, right? And that's the reason why you're not seeing that kind of confidence that is building up when you talk about gold or, for that matter, silver as well. In that kind of a scenario, is it still correct to build a case when it comes to investing in gold and silver, or wait until crude settles at certain levels where you see some bit of, stability emerging? Because usually the correlation is markets are going down, that's the time you invest in gold and silver. Right now, as Tamanna was mentioning, there's confusion across.
My only point is that gold has not performed the way that you had traditionally expected it to perform at any point during this conflict. In a normal situation, because it's already run up.
And plus, you have crude, which is coming in, is spoiling the party for it.
So 65% gain in 2025. Obviously, the reason why gold actually fell off a cliff and then recovered.
That was a different crisis they had to manage. So, what about you? What stood out for you?
So I think for me, the way I'm looking at it, Tamanna, is that there is tension between long-term structural optimism is what you're seeing right now. But when you talk about the short term, there is acute pressure. So these are two sides that we're looking at. Now, first up, your underlying growth story in terms of India from the commentary that we pick up remains absolutely intact and attractive. However, there is a shift happening from a broad-based rally to a more cautious, bottom-up picking kind of an approach. Now, the sentiment which is underlying the markets right now is also very fragile. So any news that comes in, we see a break that happens on that front. Apart from that, you're moving away from a high valuation uniform rally, and the Indian markets are becoming a more volatile phase where the quality and earnings growth is becoming a matter of concern. Like, for example, if you see CET, spectacular set of numbers in the fourth quarter. However, the commentary was that your first half of FY27 is going to see major impact in terms of margins on the back of raw material prices. That's what the markets have reacted to.
That's what my point is. Your Q4 data that we're seeing right now is redundant. It's old data because it exists in a world where the Strait of Hormuz was still open, where crude had not skyrocketed, and where there was no fear of constant global supply disruption.
At this juncture, in fact, I was speaking to a fund manager today, right, of a small cap fund and two thematic funds. And what he was saying is that he has already adjusted his expectations for earnings for FY27. And the longer, at this juncture, it's an ongoing adjustment, right? So the longer this conflict lasts, the more you will have to shave off of earnings in FY27.
So to add to that, you were talking about the rupee. Now, if you talk about the rupee, 95.32 is what we hit in intraday trade today, right? Your rising oil prices are also triggering your FI outflows. So you have the rupee, which is weak. April alone has seen FI outflows of $7.5 billion. 2026 alone has seen outflows more than $20 billion. And to add to that, if you talk about the central bank strategy from here on, you're not really seeing them, say, play a level, they're not trying to level the defense over here, but what they're trying to do is manage the volatility. So that's where everyone is stuck.
You're saying they're not defending a level.
Yeah, I mean, there is no defensive play that they have right now,
you
right?
You can't at this stage. It's like throwing water.
That's exactly
it's like using a bucket and trying to pour water at a forest fire.
It's not going to work. Okay, one thing though that was, I would say, because a lot of what we've talked about are the negatives. One thing though that was a little heartening was this conversation we had with the guys from Kepler. Now, Kepler is this agency that tracks the movement of oil and energy across the world, and they talked about how a large consignment of crude from Venezuela was making its way to India on the path of the Cape of Good Hope. And their lead analyst talked about how India has figured out 85% of its requirements. There's a 15% gap and of how much crude we need. And that 15%, it's not that we don't have other alternatives. Dunya mein crude hai, but the fact is that there is a gap of how much is going through for the whole world. So the world will find alternatives is my point. It's a race against time, right? Does India manage to figure out how much crude we need in time till those alternatives are found, or the Strait of Hormuz is open? It depends on what happens first, and that was quite heartening to see.
And you said it's all about the time, because if I remember correctly, please correct me if I'm wrong, 28 days or so is what it takes, 28 to 30 days
to come
is
from
what
the Cape
it takes,
of Good Hope.
From Venezuela to India from the Cape of Good Hope, and you're talking about 2 days effectively from the UAE through the Hormuz Strait into India. So it's managing of a supply chain that was very, very quick. And of course, by the way, this last week has been momentous from that perspective as well. The UAE stepping out of the OPEC, and what it means for crude oil. A lot of analysts talking about the fact that if they move, and we had these numbers up, they have 3.5 million barrels per day capacity right now. They're amping it up in 2027 to 5 million barrels per day. And the implication for a relatively inelastic commodity is that even a small increase in supply can have a dramatic bearing on the prices.
But think of it this way, there was never a problem with crude supply.
Sure.
It was a problem with crude. This choke point is the transportation.
Yes.
There was excess crude in the world even before the Strait of Hormuz problem happened, and basically the war happened. Gautam Shah is joining us. He's founder of Goldilocks Global Research. Gautam, we wish you could be here. But on Editor's Cut, we've all given our takes of how we've seen the week gone by, the situation, and what we think is going to happen. How are you looking at things?
Well, good afternoon. I think markets are beyond geopolitics. We've discussed a lot of geopolitics in the last 1 month, but I think the good, bad, and ugly, all of it, I think, is now in the price. Because if the situation intensifies, the market is not reacting. If the situation gets better, the market is also not reacting. So I don't think it's a bad place to be in, because markets are now looking at more domestic related factors, which is India's earnings, consumption, AI related disruption, FI selling, and all of it is pretty much there. So I really feel that it's a battle between domestic liquidity and all other factors. And it's really domestic liquidity that has kept this market afloat. Because if you look at that one chart of Nifty versus the world, you'll realize that the Nifty versus the world, we are actually at a 52-week low, despite all the strength that we've seen in the last couple of months. So I think in an overall context, I still feel that the Nifty and the large caps would not do anything substantial. I said this last time in our interaction as well, that 24,600 could be a ceiling. Right from that level, we've seen a bit of a downtick. And we are yo-yoing in that band of 23,500, 24,600. And if Nifty was a team, if you look at the players of the team, IT, FMCG, Reliance Industries, SDFC Bank, none of them are firing. In this environment, you can't expect the team to do well consistently over a period of time. And given that, I still feel that the Nifty and the large caps are going to go nowhere probably for the rest of the year, and they will just continue to languish in a range. But in this very period of the last 3 weeks, we've seen so many themes do well. Metals, PSU, energy, the entire Adani group, real estate making a comeback. So be in specific pockets. This is a stock-specific market. We are facing a lot of headwinds, but smart money is actually going into value, and growth stocks are not doing well. And I think this is a trend for the rest of the year.
It's a very interesting point that Gautam is making over here, because if you talk about the range, I was just looking at Nifty 50 range from the 3rd of March to now. It's been a 2,200 point range from the lowest levels of Nifty 50 to the highest levels. A low of 22,182 to a high of 24,601. Likewise, Bank Nifty has been in a range of 10,200 points, a low of 49,954. and a high of 60,177. Now, when Gautam is indicating that probably this is going to be a market where you will see value and not growth, it connects me to what Rhythm told us, that there is pessimism in sectors like banks and IT, and wherever there is pessimism, that's where value will come in. There will be no growth. So don't run behind growth, run behind value. So probably these could be sectors one should be investing in. I mean, the question is then, do you really stick with that kind of a scenario?
I think I'm curious to know what Gautam is seeing as value buys right now and where those spaces are. Gautam, are you looking at any of the Q4 data at all? Does that make sense right now in the current context?
Well, I think the bigger problem is really consumption and the economy itself, and the fact that do we really deserve such rich valuations versus the rest of the world? For the last 3 years after the COVID rally started, 2020 to 2023, everything was justified because things were, on track. AI disruption was not there. FI selling was not there in that magnitude. But I think things have changed quite a bit in this last 1.5 years. Because if you look at other markets of the world, I mean, look at what Brazil has done in the last 6 to 8 months. Look at what Korea has done in the last 1 year. Very, very massive moves. Look at Japan. It's trading at lifetime highs today. So I, as a global analyst, when I look at many of these pockets, I just find that the India piece is really not top down. It's really bottom up in terms of opportunities. But coming back to that point of value, the fact that Coal India, NTPC, NMDC, Power Grid, SBI, SAIL, all of these stocks have done phenomenally well in the recent past, that they've held out beautifully. So the message is loud and clear. Be in the entire PSU basket. I think that's where clear value is. Energy, obviously, for its obvious reasons, is doing well. And metals, fundamental analysts still don't have an understanding as to why metals are doing as well as they have in the last 6 months. But I see a massive base metal rally coming, with copper, aluminum, zinc, lead, all likely to do well. So that's again an opportunity. But if you look at the growth stocks, I mean, if you define HDFC Bank and Asian Paints, for example, as typical growth stocks, look at what they have done. I think the writing is on the wall.
Gautam, we were debating about the Indian rupee and whether gold can come in from the Indian perspective as a foil or as a hedge. I wonder what you think about, one, the currency pair, and two, the yellow metal and the way that it has behaved in this year.
On the currency, every time I've tried to be a little optimistic, the market has failed me. And I think it's happened every single time. Every single time in the last 6 months. And I think when it rallied from levels of 94.5, there was this feeling that maybe now things are getting slightly better. But I think in the last couple of days, it's back to levels of 94.5. And forget the Indian rupee versus the dollar. Look at what it's done versus euro. Look at what it's done versus pound. It's really a sorry state of affairs. And when I speak to many of the institutional investors, not only are they complaining about no relative returns for Indian markets, large caps, they're also a lot complaining about the currency. So I think this is a problem that we are definitely dealing with. And with oil at levels of 100 and beyond, that's not helping. That's the reason I said there are just too many headwinds. In this environment, can you actually park your money in gold and silver? If you really look at it, it's gone quiet. Last 2 months have been very quiet action for gold and silver. So much has happened on geopolitics. Logically, you would have expected gold and silver to make new highs. That's not happened. And they're not collapsing as well because there is a lot of demand at lower levels. So I think they will consolidate. So don't expect serious returns in gold and silver. You should stay invested, but you should pick the right price to buy, which for me is 4,300 thereabouts for gold and 65.70 thereabouts for silver. But coming back, I think the real opportunity is micro cap and small cap, because there is probably less FI selling or no FI selling, low DII ownership, and probably companies can do far better, in that landscape because they're not getting disrupted overnight.
Just to that point, Gautam, the opportunity certainly existed in March, but I'm just wondering, after this, and we were talking about it earlier in the week, out of the 500 stocks in the Nifty 500, you had over 300 at one point that had gained 30% in the month of April alone. So you're saying that there still exists a lot of opportunities in the small and micro cap space?
I think so. So microcap index, just to put numbers, is up 22% from the recent lows. Small cap index is up about 18-19% from the recent lows, which is very large. Now, don't look at NSE 500 as a metrics because that's predominantly large caps. But if you look at the total market index, which is about 750 stocks, which I think will give you the exact color of the market. So I do believe that the real opportunity is in stocks where the market cap is somewhere between 1,000 crore and 30,000 crore. That's my working basket. In fact, that's what we have been recommending at Goldilocks, stocks. And I think you're going to see a lot of big moves coming in there. Remember, this entire space has seen massive price destruction for the last 18 months, where on an average stocks have fallen 45%, irrespective of the fundamentals. So the comeback had to happen. And even on down days right now, you are seeing a lot of micro caps and small caps. Even today, the micro cap and small cap screen was quite decent, I would say. So I think this is an opportunity which is likely to stay for the rest of the year, mainly because of domestic money.
I'm wondering, Gautam, are you then not at all constructive on the Nifty?
I'm not. It will keep jumping either side. It will keep tempting you both on the greed, and it will keep getting to a point where it will get a little fearful, but it will not break out or break down. You know, had this been a different kind of an environment where there was no domestic money, I would have said that we would have fallen a lot more. But I think it's good to be in a range. You know, in technical analysis, we say that correction are of two types. One is when you actually fall and correct. The other is you go sideways and you correct. And I think we've gone through that sideways correction actually for the last 18 months, if you really look at it on an overall basis, which is good. And I think the market is finding its footing. Hopefully the next couple of quarters, the earnings season goes off well. And then I think people will start to realize that there is definitely an opportunity in India. But my bigger concern is there are just too many opportunities in the global landscape, you know, around the world, with S&P 500 today at lifetime highs. I'm told Google came out with wonderful results just an hour back or something. So I think given all of that, you have to think globally as well and not just look at the Indian markets.
So are you saying, Gautam, invest globally and not in India right now? Because in India, if you're talking about markets, it's mainly with regards to domestic-oriented sectors and not anything which have exposures to the export-oriented markets. But apart from that, you could be looking at a S&P 500. You could be looking at what's happening with the NASDAQ. These are indices which have actually jumped quite a bit.
You know, unfortunately for an average investor, it's very difficult to invest globally because you just don't have too many products. We can keep talking about it.
Thank you for saying
but an average retail investor or an HNI does not have that product. And even if some of the popular products that are available are a typical S&P 500 and a typical NASDAQ, which has already seen a massive move in the last 2.5 years. So that's genuinely a problem. But for somebody who's only looking at the India story, be in the right pockets. You know, we really try to be in PSU Metals.
You have to tell us a few more pockets apart from PSU Metals, because our Desi guys, how many of them can invest, are investing. But you have to leave us before we wrap up and look for the next week with some great ideas, Gautam.
You know, I must say this, diversification is dangerous in today's market environment. You know, we've all been learned that you need to diversify to do well at the markets. Diversification has actually not worked for a lot of market participants in the last 2 years. And I think if you are concentrated and if you are in those select basket of stocks, very few handful of stocks in the large caps have done well, and a lot of stocks in the micro caps and small caps have done very well. So stay concentrated, stay in a huddle, stay with companies, which have nothing to do with foreign policies, stay with companies where there is earnings visibility for the next 5 to 10 years. And as I keep repeating, for me, it's metals, PSU and energy might be available at good prices. I think we can get weaker and weaker, and it's going to be more difficult for market participants in that environment.
Stay in a huddle. I think that's a good takeaway. Gautam, thank you so much for joining us on Editor's Cut this week. And I think wise words there. I don't remember the last time I heard Gautam Shah saying he's not constructive on the Nifty.
Nifty, yeah.
Yeah, that's telling to what kind of times we are in. Having said that, we started by saying that the word of the week is confusion. It's very possible that, in 24 hours from now, we'll be extremely optimistic. By Monday, the world could have changed and we don't know in which direction.
Yeah, I mean, you have 3 days to deal with where you are not going to see any market reaction, at least in India.
Yeah, flurry of posts and commentary that could come in, that could change.
On either side.
On either side. So, I suppose stay nimble is the biggest takeaway that we can give you. But that's all the time we have on Editor's Cut this week. Tell us what you think about the show. Tell us what you think we should add in it. And we're listening and waiting to hear from you. Thank you for watching. Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner at the Man.
Benchmarks are under pressure with the Nifty ending below 24,000 mark. Sensex lost close to 600 points today. PSU banks and autos are the top sectoral losers, with all major sectors trading in the red. Rupee slides to fresh record low of 95 rupees 33 paise to a dollar, recovers from all-time low to close at 94 rupees 92 paise per dollar. Indian currency pressured by Hormuz tensions, leading to crude surge and FPI outflows. Oil on the boil. Brent crude spikes to wartime highs, hits 122 after Trump flags military options against Iran, eases slightly to $115 a barrel. HUL delivers a steady set of numbers, beating the street expectations across key matrices. Net profit, revenue and EBITDA all came in ahead of the estimates, while margins held firmly at 23.5%. HUL posts highest volume growth in 15 months at 6%. Amid looming Mythos AI threat, IBA holds a meet with the bankers in Mumbai. Sources tell NDTV Profit that FinMin is not keen on Indian banks getting direct access to Mythos. After passenger fury over last-minute flight cancellations at Mumbai airport, SpiceJet cites operational issues and bad weather. Bengaluru, Delhi and Ahmedabad routes faced major disruptions. Heatwave grips northern states as temperatures soar. Relief likely in parts of North India soon. Meanwhile, Bengaluru rain wreaks havoc, at least 7 killed in rain-related incidents. Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar, and over the next half an hour, we'll tell you all the important news developments of the day that you must know about. First, let's begin with the market. And the equity markets and the benchmarks are under pressure, with the Nifty ending below the 24,000 levels today, while the Sensex lost close to about 600 points. Now, all major sectors trading in the red. For a detail with all the market action, Jasmeet, tell us.
Well, thank you for that. A weak day for markets indeed. If you look at Nifty 50, it ends in red and closes below the crucial mark of 24,000 in today's trade. While small cap 250 and mid cap 150 also feel the heat and they end in red today as well. If you look at the weekly image, Nifty 50 ends in green over the week, but still closes below the 24,000 mark. While in terms of the broader markets have outperformed the benchmark over the week, while Nifty small cap 250 has gained nearly 2% In terms of top gainers in small cap 250, we have stock like Cohen's Life Sciences and Sapphire Food among the top gainers in small cap 250. Now Nifty mid cap 150 also ends in green for the week. And if you look at the top gainers of mid-cap 150, we have stocks like Sindh International and OFSS, the Oracle Financial Services, which has gained among the top gainers in mid-cap 150 over the week. In terms of the key sectors, all sectors end in green, barring the financial aspect of Nifty. That's Nifty Financial Services, Nifty Bank and Nifty PSU Bank feel the heat and they end in red, but barring those, all the sectors have ended in green over the week. Now, in terms of top gainers, we have Nifty Oil and Gas gaining the most sector over the week, has gained over 2% in terms of top gainers in oil and gas. We have stocks like Reliance Industries and ONGC among the top gainers. Now, if you look at the weak sector, the sector that lost the most over the week is something like a Nifty PSU Bank, where Indian Bank and Union Bank fall the most in over the week. So all in all, we do see a good image over a week, but during the day, the Nifty ended in red.
All right, and Jasmeet, there was also a fair bit of volatility during the trading session where the losses were much higher and then it recovered slightly. All right, let's also get an expert opinion going on the Indian markets and what's really pressuring the Indian markets and the outlook forward. Well, Mark Matthews told NDTV Profit that higher oil prices hits Asia far harder than the US, and given its importance as well as the import dependence of our markets, he says that's also why Asian markets are under pressure. Listen in.
If it stays at this level, it's definitely a fundamental threat for India. And that's why, by the way, Asia is underperforming this morning the United States. Not just India, but other countries in Asia as well are net oil importers. America is a net oil exporter. For America, it's more mixed than bad. For Asia, it's just plain bad, and that does include India.
All right, and it's not just the equity markets which are really seeing that pressure building, but it's also the currency market. In fact, the Indian rupee, that really slipped up, continuing with its depreciating trend over the last few days. Remember that rupee has hit a fresh historic low today, breaching the earlier record set on March 31st of the last year. Now, the currency closes at 94.92 against the US dollar. But remember, the all-time low that it has really touched today in the trading session was 95 rupees 33 paise against a dollar, which is the lowest level that the Indian rupee has ever seen. And on a broader basis, the rupee has now depreciated over 7% in the last 6 months and around 6% year to date, making it one of the weakest performing Asian currencies in this particular year. Now, the fall is being driven by a combination of factors. Really surging crude oil prices really augurs very bad for the Indian rupee, and really a pressure point. And oil prices, remember, nearing $120 per barrel amid the Middle Eastern tensions. Now, India's heavy dependence on oil imports, a stronger US dollar, and also continued foreign portfolio outflows that are seen in the equity markets are the pressure points on the rupee. Global uncertainty is adding to that particular momentum. Now, with global uncertainty really intensifying, the pressure on the rupee remains elevated as the markets really brace up for further volatility. Let's also listen in an economist view on that, Sakshi Gupta from HDFC Bank, on the worrying levels of 95 to a dollar for rupee and how RBI could be looking at it.
They are not targeting, any particular levels on the rupee, right? This is a, continuous communication that has come in from the RBI and is very reflective in their actions. So I think it is more about the pace at which the rupee is moving. So, whether, a quick jump to 95 plus levels, of course, as I said, warrant some amount of, could warrant some amount of intervention from the RBI, but they do not have, 95 is not the line in the sand for them.
All right, so that was about the Indian markets, both equity as well as currency, and both being impacted by a single largest factor, which is the crude oil prices. Let's take account of that as well now. Now, the global markets are really seeing the surge in crude oil prices, with Brent holding above $118 to $121 per barrel range, and WTI really trading north of $107 a barrel as the geopolitical tension tensions in the Middle East really intensify. Now, the latest leg of the rally is being driven by the escalating concerns around Iran and stalled negotiations with US, and also remember the renewed risks around the Strait of Hormuz, which is a critical global shipping choke point. Now, the markets are pricing in a fresh geopolitical escalation in Iran. Now, with energy inflation risks really returning to the spotlight, the key question is how sustained this spike could be and what it means for the global growth as well as the central bank policies across the world. Let's listen in to Nachiketa Saurikar for more on this particular important factor.
The Strait of Hormuz is closed. We have now been using the inventories for 45 days as about 10-15 million barrels of supply is curtailed on a daily basis. And we are seeing the prices going up as a result. And these prices now will remain elevated at least till end of Q4. First, we need the straits to open, and after that, it will remain elevated for another 6 to 9 months as the countries have to go ahead and fill up their inventory. So now we have clarity that the oil prices are going to be higher for a much longer time.
All right, crude inventory really depleting fast, but of course the government is making measures of really restocking our fuel while Iran crisis really continues. So 12 million barrels of Venezuelan crude are now headed to India on 6 super tankers, expected to really replace a significant portion of Iraqi imports. And this comes as the US-Iran conflict really enters its 3rd month, and the Strait of Hormuz blockade really continues to disrupt the global supplies, and India is also feeling the heat of that. A Kepler report really suggests that it May deliveries of about 11.8 million barrels, just around 2 days of India's consumption, underscoring tight supply conditions as well. Now, Kepler also tells NDTV Profit that Russian crude remains both strategically as well as economically critical as India looks to diversify the sourcing of its fuel needs. Let's listen in to Sumit Ritolia, who leads the analyst group at Kepler.
It's not new that India is diversifying, like being dependent 90% of our energy requirement of crude. Like India has been diversifying from quite a few years, and given now the situation around Strait of Hormuz, diversification is very important. And as you pointed out, like Venezuela, it's a welcome move, I think. And if you look at our data, also Venezuelan crude import, India used to import around 300-400 KBD, and as of now, what we are tracking in May and April, we might be at 6 years high of Venezuelan crude import. But that said, overall import has dipped, like we see around 15 to 17% of dip, like what India was importing around 5 million barrels per day, 5 to 5.2. As of now, we are importing just around 4.2 to 4.4 million barrels a day of crude.
All right, let's now shift our focus to some big earnings of the day. Remember, we are in the thick of the earnings season. Adani Ports and SEZ posted a strong quarter. It is also the first Indian integrated transport operator to handle over 500 MMT of port cargo. Now, the Q4 revenues are up 26.5% at 10,738 crores. EBITDA is up 20.3% at 6,020 crore rupees. And net profit is up over 10% at 3,300 odd crores. Now, the important outlook that has been given by the company is that they expect the FY27 revenues at about 43,000 to 45,000 crore rupees, EBITDA at 25 to 26,000 crore rupees, and will also be looking at taking up a capex of 12,000 to 14,000 crore rupees in FY27. Let's listen in to the management. Ashwini Gupta, the whole-time director and CEO at Adani Ports and SEZ, on the company's quarterly performance and guidance forward.
Hello, and thank you for supporting us by having confidence in growth of APSEZ. We said 500 million metric tons, and India, along with our global businesses, delivered. This is not an operational statistic. It marks an India infrastructure movement. Now, I present another strong performance by APSEZ for FY26. Once again, we have exceeded our own guidance. APSEZ outperformed the upper end of revenue, EBITDA, and CapEx while closing with net debt to EBITDA at 1.9x and a ROCE of 16%. Another evidence of our healthy business growth with financial discipline. FY26 revenue grew by 25%, EBITDA grew by 20%, and PAT grew by 16%. During the year, we faced challenges and disruption. Operation Sindoor, geopolitical disturbances, and West Asia crisis. Still, we delivered, serving the nation by handling multiple challenging vessels like LPG, managing transshipment overflow from Middle East to hit 500 million metric ton. Every year, we set a guidance. Every year, we exceeded. This is not a luck. This is integrated in our culture. Reflecting on the strong performance and results, our board has recommended a dividend of rupees 7.5.
All right, Adani Ports management there announcing a dividend of 7.5 rupees. Adani Enterprises has reported a steady operational performance for the fourth quarter, with revenue really rising over 20% on a YOY basis to 32,400 crore rupees. It has also approved a 15,000 crore rupees of fundraise, which is signaling to expansion and capital requirements across businesses. It's also worth noting that this also includes a one-time gain of nearly 3,900 crore rupees in year-ago period, which impacts the comparability on the profit front of those numbers. So those are Adani Enterprises really numbers. But remember that global backing for India's clean energy push is getting stronger. Speaking in Delhi, Jeffrey Sachs, who's a professor at Columbia University, called the Adani green expansion extraordinarily important for the country. He highlighted that the scale and forward-looking approach of the renewable push not only strengthens India's energy transition, but also positions it as a global leader in sustainable infrastructure. Listen in.
I think what the Adani green push is extraordinarily important for this country. Very smart. It's looking to the future, and it's operating at a major scale. So it's a very, very positive development. Very exciting for the whole world.
All right, let's talk about HUL. Of course, the stock has been beaten down after the results, but that was also probably the sentiment of the market today. But HUL's numbers were steady for the fourth quarter of FY26, where there was double-digit growth. But also remember that it posted the highest ever volume growth in last 15 quarters at 6%. In fact, Mahima is here with the fine print of those numbers. Mahima.
Yes, so overall, good set of numbers from HUL. In fact, a steady set of growth is what we are seeing. The revenue saw an uptick of around 8%. EBITDA has overall seen a good growth of around 6%. Margins have come in at a higher end of guidance at that 23.5% mark. The management, in fact, has gone ahead and said that the margins will remain in that range of 22.5% to 23.5% despite of the raw material inflation that we are seeing overall. And net profit has seen a good growth coming in at 21%. The focus, I think the key takeaways from the management interaction as well as the press conference were that the management remains focused on fewer and bigger bets, remain focused on volume-driven growth. They remain focused on premiumization as a whole. They've said that they are going to take calibrated price hikes anywhere between 2 to 5% because of the West Asia conflict. Margins, again, like I said, they said that it will remain in that range of 22.5 to 23.5%. And to maintain that, they will be taking calibrated cut in other expenses like media, advertisement, etc. In terms of overall, trade-wise perspective, they said that they're investing in general trade as well as they've, have had a separate team which is also managing quick commerce and e-commerce. So all in all, it's been a good growth. A volume growth coming in at the 6% mark at a 15-quarter high is most certainly a positive one coming in from HUL. The stock probably is seeing profit booking, but a good set of numbers coming in for FMCG as a whole this quarter.
All right. Thanks, Mahima, for giving us a good insight into the perspective and the analysis of those important numbers. And HUL's growth trajectory is likely to strengthen through FY27, with coffee segment growth to be supported from higher volumes, says Priya Nair, CEO and MD of HUL. Let's listen in to what she had to say on the volume growth guidance as well.
My question is on volumes, because this time it's a 15-quarter high number that you've seen, right? Considering that you've said that you will be taking, calibrated price hikes, that could impact volume going forward. But at the same time, you've also said that, volume growth is our top priority. So going forward in FY27, I know you will not talk numbers, but any range in which you will be seeing volume growth coming forward?
So firstly, we won't offer a short-term guidance, right?
Yeah.
But let me get into firstly, what's the step up we are seeing?
Yeah.
I think the first thing is, what are we working on? The first is fewer, bigger bets. We've talked about this before. We will continue to focus on scaling up a few priorities so our resource allocation is becoming sharp. So that's the first thing. The second is working on our brands, modernizing them, premiumizing them, both in terms of communication, but also in the segments in which our brands play. Creating higher exposure to the higher growth segments is what we're working on across all our brands. Remember, HUL, we have 20 large brands and 55 total brands. So across our brands, really systematically ensuring that our brands we step up. The third is in terms of building the capability of our channels, really doubling down behind execution, because it's much more an omni-channel market, India, than ever before. So whether it is QCom, e-commerce at the top, or actually we are now investing also in general trade. So we're actually investing in building our footprint, specialized force to go to market in these channels. That combined with, continuing to drive our leverage, our operating leverage, is what sets us up for the next year.
All right, so that was the big number of the day, HUL, with their growth guidance as well. Now, India's foreign investment story really continues to show resilience, with total FDI inflows really reaching $88 billion as of February this year. According to the Department for Promotion and Industry and Internal Trade, and the government is now hopeful that inflows will cross the $90 billion mark in FY26, reflecting sustained investor interest despite the global uncertainty. For more on this, I'm joined by my colleague Rishabh Bhatnagar, who's taking us through the details. Now, Rishabh, because of the global uncertainty, of course, FII outflows have been a big theme, but at least in FDI, we have covered some ground, it seems.
Absolutely. So what we had today was a briefing by Invest India, which is the arm that comes under DPIIT. They basically facilitate foreign direct investment into India, and a couple of very interesting figures. One, of course, for FY26, we are hoping to cross the $90 billion mark when it comes to FDI. Apart from that, there's the $100 billion annual average of FDI. That's what we're looking at by 2030. And hopefully by 2032, we also beat China's $116 billion FDI mark that they achieve continuously. So a couple of very interesting figures there as well. Apart from that, you have a few key sectors that, of course, remain very important. Electronics, EV, auto, and AI remains a very strategic investment sector for Invest India as well. When it also comes to FDI, it's tough not to talk about the PN3 relaxations that were relaxed a few weeks back, but what we've learned is that they haven't kicked in yet. The formal notification is being awaited by the Department of Economic Affairs, which sort of decriminalizes the FEMA regulations. So that's what we're looking at when it comes to the FDI scenario.
All right, Rishabh, thanks so much for all those important details. But some breaking news developments really coming in on the war front, and Iran's supreme leader Ayatollah Ali Khamenei has issued a strong statement following the fresh threats from US President Donald Trump. And Khamenei said a new chapter is really taking shape in the Gulf and the Strait of Hormuz, blaming the US military presence as the main source of regional insecurity. He warned that Iran will demand and dismantle what it called US exploitation of Hormuz, adding that new management of the strategic waterway, in war of words, intensifying that particular crisis. With that, out of time on this edition of Profit 360. Thank you so much for tuning in. Keep it with NDTV Profit. Thank you.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm MD Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew, which every morning on India Market Open, your favorite market show, just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, where I get you the hottest companies which are buzzing in trade, and to get more details about it in our special segment KYC. But before that, let me give you a hint. Try to guess this company, and if you are from Mumbai, maybe you might have guessed this by now. It's a Mumbai-based realty and an EPC company. Interestingly, the company has secured a large deal in South Mumbai, or as we call it, Sobo. The stock is up 52% from March lows. That's the third hint for you. Try guessing the company, and of course the company is having other listed players as well. And the company's name in focus is Man Infra. This is the company which we are going to talk about. But why are we calling this company? क्या नया न्यूज़ आया है कि हमने इस कंपनी को बुलाया है? First question is definitely going to be a major announcement, acquiring the project in South Mumbai with a sales potential of 2,000 crore rupees. Now remember, this is a third important acquisition happening in this space, and of course we will ask the management about the key areas of expansion in Mumbai, and is there any alpha when it comes to the redevelopment of projects. That's an interesting area to look at. Another important question to be asked would be the progress for the key projects and the timelines in the residential segment and the growth outlook ahead. Of course, we'll ask the EPC segment also, where the order book status and where does the alpha lies. The management has stated that they're going into the PMC business, and if the growth outlook improves, the margins also improve. Apart from this, also an important question to be asked for Man Infra is the new launch pipeline and the growth outlook for FY27. That is something we'll be asking for, and of course the raw material prices, the construction cost, have they gone up because of rising oil price? That's a key area to ask. But to give entire perspective, we'll join in by Manan Shah, the managing director of MICL Group, where he'll give us the entire strategic viewpoint of the company and the industry as a whole. But let's try to understand MICL करती क्या है? Man Infra. Of course, there are two sides of business. 60 years in this industry as well, but the real estate portion, that is where the value is coming. It's of course helmed by Manan. The company has expanded in this segment and also is going global. There is Miami, Florida, and other places in US where they are having their projects. Multiple major ports. That's the EPC business. That's the old business, the legacy business as I call it. It's there in Navi Mumbai, Chennai, Gujarat and Kochi. So definitely there are two levers of growth coming for this company. Now they are also building one of the tallest residential towers. It's called Aradhya Awan. It's in Tardeo. It's in the South Mumbai district, and that is where the street is trying to understand how big this project can get. Of course, remember, company works in an asset-light model like a JD or a JV, that's joint development or joint venture, and that makes sense as well. MICL Group has recently acquired its third residential project in South Mumbai, and that's what we're going to talk about. These are the important recent announcements, and the sales potential would be roughly 2,000 crore rupees for the next 4 to 5 years. लेकिन साउथ बॉम्बे में तीसरा काम उन्होंने उठाया है. The projects, the names are Aradhya Awan project, that's at Tardeo. The second one is of course the culmination of 3 projects, and the total value comes in at roughly, you could say, 8,000 odd crore rupees is the Tardeo 2.0 project, and this is the expected value. This is the 5.75 million square feet. That's what the company has stated in the exchange filing. Now they recently received a 512 crore fundraise also via the preferential route, of course, for the working capital and the expansion plans as well. Let's talk about the 9-month FY26 numbers. आंकड़े क्या कहते हैं? 711 crores worth of collections. When you judge a real estate or an infra company, collections matter more than revenue recognition. Almost 4 lakh square feet sales led by projects in Tardeo, BKC, Ville Parle and Dahisar. These are the places in the Mumbai metropolitan region. Company is largely net debt free at consolidated level, and this is a very positive point for an infra real estate company. The portfolio, let's look at it. It's roughly 3.8 million square feet of ongoing residential projects, and if you look at the realty business also, that's around 4.9 million square feet of carpet area, to put that in perspective. So we spoke about the portfolio, we spoke about the 9-month numbers and about the company, but why is Man Infra in sweet spot? As per my analysis, higher collections and realizations are likely in FY27, especially from their expensive premium projects. Another important reason for Man Infra being in sweet spot is companies largely debt free. I spoke about the net debt angle. Also, let's talk about the third important reason is the strong volume buying has been seen amongst HNIs, and it was a massive sell-off. Valuations are still very much attractive, and I'll explain you the important price to book ratios to track for this counter. And apart from this, there is an important segment, the premium segment, the ultra luxury portfolio as we call it, near the western suburbs. That is where the alpha lies for most of the developers, and we have heard that. So this is the reason why Man Infra is in a sweet spot. But let's understand the company a little bit more. But before that, there are some rules in KYC, and we follow them thoroughly for every company. These are the rating parameters we give to the company. This includes income statement, balance sheet, cash flow. These are the core numbers to look at. Also the return ratios, how that has panned out over a period of time. Let's get in the shareholding. Let's get in the street cred. It's one of the favorite segments where we understand पैसा कितना बना investors का छोटे समय पे, medium समय पे और long term. Valuations, we'll compare that with the history of the company itself and the outlook ahead. This is very much important because future is something where the discounting happens for the share price. Let's talk about income statement to start with and let's see what's happened here. And largely we say the 3-year CAGR numbers are in single digit, not much happening here on a long term basis. There is a little bit of lumpiness also comes in because you have these businesses and collections and receivables is always a tough fight for any real estate or a EPC player. But the numbers also, the Q3 numbers were also not that great, they had seen some kind of lumpiness. Maybe the fourth quarter generally is a strong quarter for the real estate and these EPC companies for a lot of new work, so maybe we might see a good up move in those numbers as well. But net looking at the margin trajectory, that has been good and they have maintained that self. And remember that JV angle is there, and because of that the operational margins do well and they are concentrated in Mumbai, and remember land is very limited here, so that is something to watch out for as well. So net let's give a neutral rating when it comes to the income statement. The second reason is balance sheet, and this is what I like about a player like them. The net debt is roughly zero and the borrowings, just look at the amount, it's just like a working capital as just at the lower side, and that is where the street finds comfort. And they recently did a fundraise also where a promoter stake was diluted, but nevertheless the momentum seems good. Of course the cash balances are very volatile because this is the nature of the business, but net looking at the debt ratios and a good servicing is a strong thumbs up when it comes to the balance sheet. So we discussed income statement, we discussed balance sheet, but let's talk about cash flow. What's happening here? And of course cash flow is largely, we can see a neutral kind of an approach coming in. There seems to be a downtick in FY20. The operation to cash PAT flow, that has also been decent here. But net for a business model like this, let's take a benefit of doubt in our analysis and give a neutral rating for the cash flow segment. Let's get into the return ratios part. I explained you the margins earlier, and remember the company is also holding its ROC numbers quite strong. For a company like that, having 20% plus ROC is something which is strong, but there is of course a concern. It is slightly falling down and it depends on the seasonality aspect also, and if the collections start improving, which is expected in FY27, this might come back to that 28 to 30 mark. So let's give it a neutral rating for return ratios as well. Let's talk about shareholding. What has happened? I had mentioned you that the promoter stake will fall down because of the fundraise which has happened. There was a pref and a warrant conversion also, and that is why you are seeing this promoter stake falling to 62%. But interestingly, FIs have still holding their faith in the company. They are having 4% stake, and same thing for DIs, whatever this exposure is. So net it's a neutral rating when it comes to the shareholding aspect. Let's talk about street cred. कि stock में कमाई कितना हुआ, that's the most important thing to talk about. And remember, from the lows in 2026 itself, we have seen the stock going up 52%, but remember there has been a correction also. From 2025 highs, the stock is down 37%. And congratulations if you're holding the stock for long term. Last 5 years you have made 354%. So to balance things out, I'm going to give this a neutral rating. Let's talk about the valuations. So what happens, and this is where I feel there the attractive valuations are there. 5-year peak valuations, the price to book ratio जो हम लेते हैं वो 8 गुना था. Right now you see it's just at almost 2.5 times. Why? Because the average of these valuations is also at 4.3 times. That means it's grossly undervalued as per its own history. This is the price to book ratio I'm talking about. So it's a strong thumbs up when it comes to the valuations for Man Infra. Let's talk about the outlook and see what happens. Of course, they're expanding in South Mumbai area for the realty projects. This is a very prime real estate of India for the folks who don't stay in Mumbai. Also, the company is in talks with the redevelopment proposals in the Mumbai metropolitan region, that's also the company is looking out for. Of course, the focus mainly is in real estate, but they do have their old legacy businesses like in the EPC also. The company is doing ongoing international expansion projects in US also. That's a pretty much interesting trigger for the stock. And apart from that, of course, going ahead, let's talk about the revenue visibility and the order book also, where the numbers are very much important. The EPC order book is at 300 crore as on December 2025. We'll get the updated numbers once the company comes out with its Q4 numbers. And look at the revenue visibility, 11,600 crore plus for the real estate sales business. And of course, a major chunk of it expected to come from South Mumbai projects. So an outlook is very positive for here, but let's do the revision of the ratings which we are giving Man Infra in our KYC show. Let's see what are the key triggers, and largely balance sheet has been decent. Most of the parameters have been neutral, and if you take a more perspective when it comes to the shareholding in street cred, they are neutral, but valuations are attractive, and so is the outlook, and that is where further alpha could be there, and that is why I've taken out the main reasons why the company is in sweet spot. Let's give in the total addition of the KYC ratings. Number kitna banta hai? It's around 5.5 out of it. It's largely in line to positive on the average of the KYC numbers which we generally give out to. But to understand more and get in more perspective on Man Infra, we'll be joined in by Manan Shah. He's the managing director of MICL Group, and there are some interesting snippets about him. And remember, he has taken the company over in 2013 itself, and the real estate business, what we are talking about, that is where he has founded it, and he has scaled it to, of course, a bigger heights as well. And interestingly, he became the MD in the year 2019. That's the date to look at, and that is it. A young dynamic promoter and interesting company, especially with the real estate segment. And joining us, we are having Manan Shah. He's the managing director at MICL Group. Manan, it's always a pleasure to have you here. A very important announcement coming in for South Mumbai. This is a third announcement coming in. Could you give us some more details about it? What's the revenue potential, and what do you think about this entire area and your group's focus on?
Good morning. See, this is the further penetration in the South Mumbai market, especially in Mumbai, where Sobo ideally commands the main, the premium segment and commands the luxury segment. We had the first project, Aradhya Avan, which we had acquired a couple of years back. Then we had the Marine Lines project, and now we are expanding in Tatev as a region. And this project is, intended to start in like next couple of months. We've done the DA basically, and now we intend to launch it in this financial year itself. Things are moving very, very positively in terms of the permissions have already been applied for, and we would soon start breaking ground as well. Regarding the numbers, we are seeing a top line of around 2,000 crores coming in from this project itself, and the total consolidated portfolio of South Mumbai would now become 8,000.
It's a very interesting take, and Manan, you are taking the cream of real estate, and of course, as a Mumbai, real estate developer, that is something which we have seen in Sobo. But just wanted to understand the industry perspective. How does the Sobo realty market different from Gurgaon? Of course, it seems like it's less speculative also. Just wanted to take your industry view also on that.
If you have always seen Mumbai specifically as a location, Mumbai's South Mumbai side has always been in high demand because of the oceanic views, because of the gentry that's been residing there for not just 5 years, 10 years. In fact, if you see the past 50 years track record, South Mumbai has always been like a dream destination for a lot of people across the country. That's the reason MICL is specifically focused on South Mumbai to become one of their, pioneer locations where we would be expanding further. We have almost bid for more than 5 projects over and above this, which is on the discussion stage with multiple different societies. And we are seeing very positive signs coming in from societies because the kind of iconic buildings that MICL is doing with the kind of intention and the response that we've received from customers is phenomenal. So I think South Mumbai would definitely be in focus. Alongside Mumbai, if you see how it's different, it's mainly different because of luxury being offered. That's the most important factor. So the sizes of the apartments are significantly larger is what we've always been seeing compared to the rest of the city. So, and South Mumbai is one of the few locations where you get beautiful sea views from the higher floors, and sometimes you are like on the ocean front line also. So that is what is creating that surge in demand to move towards Sobo.
Right, of course, it's an aspirational play, and we have seen that all your three properties or three projects are expecting 8,000 crore of gross development value. But other than that, other key areas of expansion in Mumbai, and I just want to take that redevelopment angle also. There has been projects across this segment. What are the growth plans looking like for that for FY27?
See, we are standing at approximately around 5.2 million square feet of RERA carpet area portfolio. With the current discussions going on, I am very, very confident that we would be nearly reaching around 7.5 to 8 million square feet in the next upcoming year. And we've kept a vision 2030 in mindset, where we are looking at a 20 million portfolio coming in very comfortably across Mumbai city, which includes the US division as well. And